Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
guys, good morning. Welcome to the live session of Stocks Network Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Hey, good morning, everyone. Welcome to Stocks Network Trading. My name is Ron. My partner is Dave. Welcome, guys. It is 7 a.m. Eastern. It is Thursday, August 21. We hope you are having a great morning and you got some coffee and ready to go. We're going to dissect the markets together. We're going to go over today's top news. It is a busy day news-wise. There's a lot of flash manufacturing, PMI news, services, PMI coming out throughout the board, coming from Europe, coming into North America. And it is Thursday. We have our weekly unemployment claims in the U.S. also this morning. And it's day one of our Jackson Hole Symposium conference in Wyoming. It's a 3-day event. Today's day one. And it has to do, it's very important, it's held once per year, and it is the Federal Reserve and other bankers and top financial analysts and economists from around the world participate in this event. So just careful trading. This could dictate how we move into September's FOMC. We'll see if we can hear any hints or anything from it that come from this. And also yesterday, it was the FOMC meeting minutes summary, and they released the summary, and it's kind of 50-50 with their stance on a cut coming this September. So they're still regarding everything that's going on with the tariffs. Okay, so hopefully everyone's having a good day. Again, guys, I'm not going to be here every single day to remind you guys, but trade with proper risk management, especially when you have these days with a lot of news, okay? So let's get started with today's Forex Factory news. So today is a busy day. You can see it's one of the busiest days this week, all week, from Monday, Tuesday, Wednesday, Thursday, and Friday. You can see there's a lot of red folders, not just in US, but all over. So it started here. Normally we start off in pre-London with news. Here's pre-London in the markets, and then after 3 a.m. Eastern is when London opens up. We had some European flash, some French flash manufacturing, and some French flash services already released. Good numbers came out. They're below 50, but still above forecast and above the previous months. So that is good in France. Germany released their data at 3:30, so very similar, above their forecast. And anything above 50 is an expanding industry. Anything below is a contracting industry. So we'll talk about that when we get to the US ones. We also had European flash manufacturing, flash services. We had the British flash manufacturing. Disappointing manufacturing numbers coming out of the UK. Below forecast 48.2, so showing a contracting manufacturing sector over here at 47.3. This definitely affects the pound, but flash services industry came out very good, above 50, above forecast, above the previous month. So there could be some mixed data there, but manufacturing and services are two completely different industries. And then we continue to move forward, and we're going to come into 8:30 a.m. on our session. So these are what the folders we're going to walk into. We have a U.S. red high impact unemployment claims. These are our weekly unemployment claims that are released every Thursday morning at this time, 8:30 Eastern. So we can see last week's numbers were 224,000 unemployment claims. So this is unemployment benefits, how many individuals lined up to apply for unemployment claims, seeking work, out of work. So we're looking for a week over week increase of 2,000 individuals to 226,000. We'll see when the actual number is released here. Will it be above 226? Will it be below 226? And again, guys, just a reminder, these are weekly unemployment claims. So these are not monthly, these are weekly, week over week. We also have the Philly Fed Manufacturing Index. COMEX coming out at 8:30, medium impact. And that all of this time is when COMEX market opens. We'll be looking at gold at this time. So just a reminder, COMEX commodities exchange for metals opens up at 8:20 a.m. Eastern. And then 10 minutes later, we do have these US folders. After that, around 8:45, 8:50, just going into 9, we're going to switch focus and then we're going to look at some US indices. We'll look at Dow Jones and we'll look at NASDAQ. For you guys that are trading in the futures, it's NQ and YM. From time to time, we can look at the S&P or ES if you guys want. It's very, very similar to US index. We're still looking at price action. Just some traders prefer to trade other ones, but we can take a look at all of these, no big deal. 9:45, okay? So remember that Wall Street opens up at 9:30, and then 15 minutes later, a new 15-minute candle, we have 2 high-impact U.S. Folders pertaining to flash manufacturing PMI and flash services PMI. So this is where I'm going to kind of briefly go over with what it is, what to look for. So our flash manufacturing PMI, we can see last month it was 49.8, just below 50, and they're forecasting a decrease from last month at 49.7. Okay, so let's just take a look, open the folder. What is this? It's a level of diffusion index based on surveyed purchasing managers in the manufacturing industry. Okay, so think of manufacturing, building, construction. Actual greater than forecast is good for currency, for the US dollar. It's released monthly. And now just to note above that, that psychological 50, 50.0, above 50 indicates industry expansion. Industry is growing above 50. That's good. Below indicates contraction, a tightening manufacturing industry, getting smaller, right? So they're forecasting below 50 to 49.7. So we'll see what the actual number is when it comes out. Again, below 50 is contraction. If it's below 49.7, below the forecast, then it shows us how much it's contracting. Again, above 50 will show, it will come up green and will show that we have an expanding manufacturing industry. So that's what we'll take a look at for this one. Why do we care about this? It's a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. Okay, so if you don't know what PMI stands for, it's Purchasing Managers Index. Okay, so that's Flash Manufacturing PMI. And in the next folder is Services. So we have one for manufacturing, one for services. If we look at the last month, it was 55.7. So that was really good. It's showing an expanding services market. And they're forecasting a slightly a dip, 54.2, but still above that 50 marker. So still showing expansion, but contracting from the previous month on their forecast. Let's see what the difference is. So what is the difference between manufacturing and services? Again, same type of data reading. Above 50 indicates expansion, below 50 indicates contraction. Just a services industry is where you go and you purchase a product. For example, if I go to a grocery store, it's like kind of like a services industry. They're providing services. If I go for buy some fast food, it's a service industry. Manufacturing is more building. And okay, so they're two different industries, but they'll both be released at the same time. It will affect the US dollar. You can see high impact. USD is the currency involved. So whenever anything affects the US dollar, whatever we're trading, it could have an impact on it. So if you're trading the pound, if you're trading the yen, if you're trading currencies, this folders will have an impact on that when you're trading them. If you're trading the indices, stock market, if we're trading S&P 500, Dow, NASDAQ, that will be affected by this US dollar move. Also, if you're trading gold, crude oil, anything, guys, anything basically to do with US dollar will be correlated with this, okay? And then we get into 10 a.m. In Europe, you have your consumer confidence report coming out. We have our existing home sales coming out here in North America, specifically US over here. We can take a look at that. And then natural gas storage is at 10:30. And this one is the Jackson Hole Symposium. Okay, so this is day one. A reminder, this is a 3-day event that goes from Thursday, Friday, and on Saturday. Okay, and what is this? It's a meeting. It's hosted at the Federal Reserve Bank of Kansas City. It's in Wyoming. Okay, so the Economic Policy Symposium held in Jackson Hole, Wyoming, is attended by central bankers, finance ministers, academics, and financial market participants from around the world. The meetings are closed to the press, but officials usually talk with reporters throughout the day. Comments and speeches from central bankers and other influential officials can create significant market volatility. Okay, so that is a three-day event. If you want some full details on it, you can click on the Jackson Hole Symposium right here, and you can see, if you want to see the history of it, you can click on here. Last year, 2024, there's the 3 days. It was held on August 22, 23, 24. You can also see the days it was held on 2023. So it's once per year, 3-day event. It's a big event where you can see high impact individuals from around the world get involved in this. Okay, so that's held today, and it will affect the US dollar, whatever is said, okay, in it. So this was from the minutes yesterday. Divided Fed worried about tariffs, inflation, and the labor market. The minute show from yesterday, which was released. So just reading this real quick. Fed Reserve officials worried at their July meeting about the state of the labor market and inflation. Though most agreed that it was too soon to lower interest rates, minutes released Wednesday showed. The meeting summary depicted a divergence of opinion among the central bankers whose vote to hold their key rate steady came despite. So what it's looking at is like it's a coin toss now. It was above like 90% that September would be a rate cut, and now it's kind of moving down. When you saw the minutes yesterday, there was mixed reactions between all of the chairpersons involved. So it was kind of some were for a rate cut, some were for pausing still to see, more worried about the tariffs coming in and inflation. Okay, so that's what we got to see for going into September. Okay, so they'll be talking about these things at the Jackson Hole Symposium with everyone around the world. Okay, so just careful when you're trading. Just use proper risk management. That's all we can do. Okay, if you over leverage during these high impact times, you could make a critical mistake and it will be costly. So anytime you're trading through high impact news, especially on a day like today, it's just best to maybe monitor your risk, monitor your leverage, and just trade accordingly. Okay, you can see it's a very high impact day of news across the board, coming all throughout the world here. Okay, let's just continue moving forward into earnings. We have Walmart, okay, at 7 a.m. right now reporting. Okay, so Walmart is a big name. It's a big global name. This does impact the North American markets. This is like the biggest retail giant store there is. You can go get your groceries here. There's superstores. You can go get some clothing for back to school. You can get everything here, your essentials, electronics, whatever it is. Walmart is a very popular store, and this is one that you kind of want to listen maybe after the call for guidance, because consumers, you and I, we go to this store every single day probably. So this is a big retail giant. We will kind of want to hear what they're saying about consumer spending, about tariffs. Okay, are they continuing to absorb the tariffs and not pass them down onto consumers as of yet? Are they worried about the tariffs? Is it going to impact their prices on their shelves and things like that? So this one is really important, guys. 7 a.m. Eastern. This is a big security in the Dow Jones. And you can see they missed their earnings. Guys, I haven't seen Walmart miss earnings per share in a long time. It came in red right now, 5 cents. Okay, so it's, someone will say, Ron, 5 cents is nothing. 5 cents is actually a lot when it's earnings per share. So their estimate was 73 cents and they reported 68 cents. I don't have the report of their revenue right now. I guess it hasn't been released as of yet. Surprise, negative like 7%. The guidance is mixed right now. So this is going to be interesting to see how Walmart unfolds. Conference call, CFO, CEO speaking, especially. I'm sure that they're going to talk about tariffs and inflation and how everything is impacting them right now. So maybe earnings and revenue have been gone down, because remember, this is from a quarter over quarter. So this is from the last 3 months. So now data is coming in affecting these. Okay, remember when it all started with the tariffs, they weren't not in effect yet. So these guys never really got hit. Now you can start to see they have a red earnings per share right here. Okay, so this is Walmart coming in. Someone can say, well, Ron, it was over the summer months. Walmart is normally slow over the summer months. Okay, so then now starting right now, you're going to see September, October, and November, and that's kind of the busiest times. That's back to school. That's a lot of people start doing their early Christmas shopping, their holiday shopping. So that report will be very significant. And if we start coming in negative again during that quarter, then what are we going to say? It's no longer the summer slow months. Now you're getting into the very busy months. It's the next quarter. Those numbers would be very critical going into the holidays and back to school. And so I'm going to be paying attention to that. And we have some other earnings today. There are some big names, but I don't think they're as big as Walmart. Okay. In the after hours today, we have Zoom Communications. Welcome everyone on Zoom in our group. So Zoom will be reporting. So they had a good run, Zoom, during COVID. Everyone was working at home, so Zoom at that time was a good security to trade, maybe look at the options. Guys, that's how simple, trading can be. Just like something like that. When you remember when COVID and there was like a global lockdown, shutdown, we were at home, a lot of people were playing video games, other people were trading and learning and things like that. Zoom skyrocketed. Like I didn't even know what Zoom was prior to COVID. And then when COVID started, everyone was on Zoom. Work or office work, you're working from home. All you had to do was look at Zoom, look at the ticker name, check out the option chain. If you believe more people are going to be using Zoom, there is a cost to use this thing. They're going to make more money. Maybe you think that the price is going to appreciate. You can look at the option chain. If you don't want to buy shares of the company, you can look at the option chain. If it goes up, you buy a call. If you think it's going to go down, if something negative is happening, you can short the company. Just like when we're selling gold, for example, we're selling it. It's going down. You can sell these companies. You can buy these companies. At this time, we were looking for calls on Zoom Communications, and we made a little bit of money because Zoom got very popular and the share price increased, and we caught that implied volatility, because the faster it goes up, the more percentage you're going to get with that implied volatility. So Samuel, you traded video games for trading. Yeah, like that time video games, EA Sports, those games like PlayStation and all of these, Xbox, these are publicly traded companies, guys. You can invest in these, so it just takes a little time to research these things. But it's out there, guys. You can really, really do well in trading and investing when you start to do a little bit more research and you're picking up on what's going on in the overall world, so there's always opportunities, guys. So that's our earnings today. We had some signals yesterday. Here was a good signal on the NASDAQ buy. Okay, so you remember, guys, during Wall Street, we had that big dip. Eventually, it got back up. So we were looking around just above 23,000. Had a nice bullish move coming up, caught some pips, and then you can see where it pulled back into this point of interest where you got the spin top bodies. There's bodies right around here. Draw a line across 23,112, 100 here. Nice psychological number for a pullback. It held. There's kind of your spin top indecision with a nice bullish candle, and then again you got it pullbacks making higher highs, and you could take a continuation buy right here at 23,167 to break that high and catch some additional pips. So you could see yesterday's 4-hour candle was very, very bearish, but then caught that wick later on and came right back up around 11 a.m. Eastern. Okay, so there's always opportunity throughout the markets. If you miss the big sell at market open, don't get rattled, don't get stressed out, just remain patient. Maybe you can catch a pullback. Maybe if it continued to sell and it was trending down and maybe pulled back here and continued, but you could continue to sell down with the market. Okay, so don't force trades, guys. If you miss a trade, just have my mindset. Don't worry about it. There's another bus that will come. We use the bus stop analogy. If you miss your bus when you're at the bus stop, what do? Do you get stressed out? You probably wait for 20 more minutes, and then the next bus is going to come and pick you up. So trading, same analogy. If you miss it, don't worry. Don't get stressed out. There'll be another trade coming. Just take your time. Just continue analyzing the market. Take some feeler trades if you have to feel out the market. Once you got your confirmations, once you got your conviction, then you can enter with your proper trading sizes. Okay, so we'll continue to monitor everything over here. Let's just continue moving forward. Welcome everyone on YouTube, 150 viewers, guys. Just a reminder, thank you guys so much for the likes and the subscribes yesterday. It was awesome. We had over 300 likes. It was amazing. So if we can continue that today again, just a reminder, kind reminder, if you haven't hit the like button, please hit the like, subscribe to the channel, hit that notification bell, and we'll continue to do this and grow the channel with you guys, and you guys can be part of this. There is a free Telegram channel pinned at the top of your YouTube. It's this channel right over here. So you can see it's got our links to join in our YouTube channel. This was a blog we released yesterday on dividends. Okay, so maybe some of you guys have heard of what are dividends. Maybe some of you guys already invest in stock securities that pay you a dividend. But this is a great way to learn all about passive income. This passive income is the best money, guys. You basically do nothing and you just get money every single quarter. You're a shareholder of a company and they're going to pay you from their revenues, for example. Okay, so there's a good blog to read about it. We're going to do more on trading on these dividends, on what to look for, but this is a good little blog to just get your feet wet to learn what are dividends. Okay, these were those trade signals and setups that I was just talking about, it just breakdowns of the signals and setups with trade management. And there's the Jackson Hole Symposium blog. So if you want to read all about this, you can learn all about this as well. Okay, where to find these? If you come to our website right over here, stocksnipertrading.com. Education wise, someone asked me, Ron, do we have education or do we just live trade? No, we've got a whole library of education, a lot here. Okay, so there's courses on everything. So first you want to learn a little bit on Forex. You want to learn the fundamentals. Then you want to learn all about price action. In my opinion, price action is king. Here's the king sitting on his throne with a bullish candlestick. Once you learn the open, high, low, close, and all candlesticks have the same characteristics, and you learn those point of controls, then you're really going to start to learn about trading and really enjoy it. So we're the place to be, in my opinion, to learn all about price action because we believe in trading price action. Then you'll learn all about support and resistance, chart patterns, your technical indicators, few strategies to help you along your way. Full form, long form boot camps if you like. These are longer forms, and in your longer form webinars, if you're a beginner, I would get started over here. There's 10 webinars to get you started as a beginner, learn the basics. Then once you step up your game, you can start to move into the intermediate levels. There's another 20 webinars over here, take you to the next steps. And then finally, once you get to the advanced level, there's over 100 webinars over here, advanced level. These are about 2 to 3 hours in length. They are long. They do require some commitment on your part to go through all of these. There's some snipers that join our group and don't even watch these, and then they continue with questions. Ron, what is tweezer bottom lows? Like, I can only explain so much on the live calls because everything is moving so fast. But at the end of the day, if you want to go and review a little bit, you're welcome to do that. Okay, so this is where you can do your own online education yourself, and we'll help you along the way. Okay, and here's the blog. If you click on more, there's the blog. This one is a good read, Jackson Hole Symposium. Learn all about it because that's happening today, tomorrow, and Saturday. And then this one about dividends, real quickly. So dividends are payments made by corporations to its shareholders, usually in a form of cash or additional stock. They represent a portion of the company's profits that is distributed to the investors, typically on a quarterly basis every 3 months. Dividends are often seen as a sign of a company's financial health and stability, as they indicate consistent profitability and a willingness to share profits with shareholders. So why dividends are great for passive income? You have a regular income stream. It's like a paycheck. So it's great. I have mine staggered where I get a dividend payment every single month. Every first of the month, I have a dividend payment. So like I'm in Enbridge Gas. So for example, it's every 3 months. Let's say it's March, it's June, it's September, it's December. Then Apple, I'll have like a different one, and that one might be starting January. So I have my portfolio the way how I've constructed it, where I have a monthly dividend every single month. It's like just getting money from these companies. It's great. You can switch it up, you can hold. I have it in what is called a DRIP, a direct reinvestment program, where whatever the money is, I don't need it right now. I'd like to use it for retirement. So it automatically just gives me my money, and then it buys more shares of that company automatically. It's like a pre-authorized setup where I don't even have to do anything. So it just continues to buy shares of that company, so that so it compounds my dividend return. And it starts small. Okay, remember, everything starts small, but once you get that ball rolling, then it really starts to compound and really start to accumulate. Okay, so everyone will say, well, Ron, getting started, it's not much. Well, same with trading. If I say, well, just when you start trading, you're not going to make much money. But there's traders in our group who are making daily goals and $500 to $1,000 per day now. So it all starts small. Everything starts small. Okay, so just understand that in your head, that it's going to start small. But if you continue with this over the years, that's how you build wealth. You're not going to build wealth in 1 month. You're not going to build wealth in 6 months or 1 year. After 5 years, 10 years, 20 years, leading to your retirement, you have built your wealth, okay? And then you have steady income coming in, passive income. So consider this, especially if you're at a young age. If you're in your 20s, I would highly recommend this. Highly. Like I'm preaching this to my kids right now. They have, my son is 14 and my daughter's 9. I have them already investing in, my daughter is 9 years old, and she's getting dividend payments right now. She's earning a paycheck from these markets. So what is the dividend process? An investor purchases one or more shares of a dividend paying company. Not all companies pay dividends, so that's why you got to do some due diligence to pick out the ones. Company evaluates performance at the end of the quarter, their quarterly earnings, and company may declare and announce a dividend payment. Company announces the dividend amount and the dividend dates, and then the investor is paid stated dividend or each share that they own. Okay, so a little bit more, just New York Stock Exchange, NASDAQ, some dividend paying securities. AT&T, Verizon, Altria Group provides a high dividend yield. It's supported by its tobacco products business. In the Toronto Stock Exchange, this one I personally own, Enbridge Gas. I've owned this for over 20 years, and it's one of the highest paying dividend securities, about a 6, 7, 8% yield paid out quarterly. Bank of Nova Scotia here in Canada, CIBC, also financial banks are good ones. Manulife insurance companies are very good as well. Okay, so that's a good read on dividends to further your trading, and not just where you're just trading gold or you're just trading like US 30. There's other things you can do in these markets. Lots to do. Okay. So thanks everyone. If we can just, before we get started, hit the likes, subscribe to the channel. Let's get to 82,700, 12 more subscribers. We can hit that 82,700. We're building some higher highs and some higher lows, but we're kind of plateauing right now. So we found our ceiling. Let's see if we can get above that, guys. And let's start off with gold. Okay, so gold had a big drop at 630. You can see it right here. Broke that supporting level, continued to drop all the way down at around 3,325, that psychological area, and it came right back up. We haven't retraced everything since the drop. It might be like a 50% retracement or a zone. I would mark off this zone right over here and stretch it into the future, because that could be where the resistance is. If you're trading right now. Okay, let's see how if it comes back in there? Will it push back down? Will it? I can already see maybe it will be a higher low here, continue to build, maybe break above here, close above here, then it will retrace that entire way. Or it could just come up here, continue pushing down, and it might not be that higher low, maybe a double bottom down here, or it'll continue just to break for new lows, and it's a lower low, lower high, lower low, and we're going to trend bearish on this, okay? But let's start off with a full clean top-down analysis. I'm going to start off on the daily, and we're going to move ourselves down to the 5 minutes, okay? So this is gold on the daily, and you guys are probably getting familiar and sick and tired of me going over this every single day, but that's trading. Trading is boring. When you have a routine, it works, okay? Good morning, everyone on Zoom. Welcome. Conrad, DCY, welcome. Samuel, good morning. Lady Stone, good morning. Oyugi, welcome. Thanks for joining. Welcome, guys. Seng, good morning. Dale, good morning. Husky, Amrit, welcome, brother. Hope all is good, man. Thanks, man. Emmanuel, welcome. What about REIT investments? Very good investments as well. Real estate ETFs, good investments as well. Very passive income, very low risk. Emmanuel, very great. You know, if you can diversify your portfolio, absolutely include some REIT ETFs. Then you got your foot in the real estate a little bit. Okay, so they were big about 10 years ago. Slowly have came down because real estate has slowed down. But when real estate was booming, Emmanuel, the REIT investments ETFs were paying a very good solid dividend and nice return. So you just gotta kind of go with how the industries are moving. When real estate is booming, I would take a look at those REIT investments. Right now it's kind of slowing down, so you get a lower yield right now. There's other securities or other ETFs that are paying a higher yield right now. Okay. Okay, so guys, let's get started. And also, welcome everyone on YouTube. Thank you guys for joining. Almost 200 viewers, guys. Thank you guys so much. If you guys can kindly hit that like, subscribe to the channel. Good morning, Keith. Welcome all the way from England. Welcome, brother. Tommy Savage, welcome from Pennsylvania. Thank you. I might be coming to a Pittsburgh Steelers football game. I'm going to Dallas in Chicago, but we might be making also a road trip to Pittsburgh, Pennsylvania. It's a beautiful stadium there at the Three Rivers. So, Tommy, maybe we'll see each other in Pennsylvania, man. Andrew, welcome. Somehow you're not getting notifications from YouTube about the stream. I just check in at usual time. Yeah, sometimes it's hit or miss with that notification bell. That's to do with YouTube. I have no idea how to fix that, but just continue joining in. Check our daily live schedule and just pop in. Welcome, guys. Everybody on YouTube, thank you guys for joining. So let's get started. First things first, gold all-time high right up here. I'm going to place an orange line. We all know that it's 3,500 on the dot when we hit that all-time high up here. It was back in April 22. So you can see, look how gold has been consolidating in this big bullish flag, you can call it, because from the all-time high, where was our most recent low, it was right here on May 15th at 3,120. So if you see the high and the low, we're in this big flag, and it is continuously making higher low, a higher low, and a higher low. So, but what we're failing to do, what the buyers are failing to do, is continue to make higher highs, okay? So this is how a market consolidates. It coils up, it goes up, it comes back down, it goes down, it comes back up. You can see it's making lower, like if I was to draw a trend line from here to here to here, it is descending. If I also drew a trend line from here to here to here, it is ascending. So that's basically what a symmetrical triangle is. And a symmetrical triangle can move in either direction. It can move bullish if we accumulate enough on the bottom and we're still ascending, and then we start to break some highs, or it could also break down bearish because we have sellers accumulating the top with the lower highs, but not breaking it down because there's still some support left. So it is still technically accumulating in here. Gold tends to accumulate for months on years. I've seen gold accumulate back in 2010. It was accumulating for multiple years before it actually started to break out and break new highs. So, you know, but for intraday traders, for scalpers, we get enough momentum and volatility that we can get daily goals. But for investors and swing traders going through this, it could be, you could lose interest. And that's when the markets see that. When you start to lose interest, that's when it's going to start to break out, because you're going to get rid of your position, and bigger, stronger hands will accumulate that position and take it where they want to take it. So if you're holding this, it could be both ways. I know a lot of traders that are holding gold long, and I know a lot of traders that are selling gold long and looking for it to break down. There's no clear direction as of yet, but let's just go through the technicals with what we see. When we hit that all-time high, those two bodies closed in there. That's where I started that block. I can see it came in a second time, double top. There's the M top, push down. When we stretch this into the future, third top came in early June, back down. We came in a fourth time right in here mid-June, back down. We revisited this mid-July. Again, in there, and then pushed right back down. We came in here just recently, beginning of August, just a few weeks ago, and you can see how we came in there and again back down. So this block is still in the market. It's still there, and we are trading below it. We have lower highs. We're not engaging in this box anymore. Technically, we're moving away from it. We're diverging away from it. And notice how many fake outs there was up here. Here was a big fake out. Tuesday, strong close with good volume, and then look at the midweek Wednesday reversal. Again, we came strong in here. Friday, then we have weekend news over the market, and then Monday open, they diverge it away. They fake it out. Again, we came in here again. Tuesday, closed strong. Midweek, Wednesday, reversal, back down. Again, last Friday, August 8th, over here. We closed right in it, and then news over the weekend, and they closed it back below and pushed it down. Okay, so, and pay attention to those daily closing candles. Tuesday, Wednesday, I always do on all securities. I look for midweek reversals in this situation, or I look for midweek continuations. For example, this Tuesday close, when it closed above, I flip this red zone green. But when it's coming down, I'm looking for a wick at 50%. There's no wick there. I'm looking for a wick at that point of control, a point of interest where that body opened. It was not there. That was a big bearish engulfing candle. But sometimes what I'm looking for is a Tuesday close, maybe a midweek Wednesday come in there, catch a wick, then come up and fill. Then we could be continuing with a midweek continuation. So, but we've failed on midweek continuations and weekend Friday closes. Okay, so we got now all-time high. We have our red resistance, supply, sellers, whatever you want to call it. That's what that red box represents, okay? Everyone has different names for this box. I'm not here to educate what the name of this box is. I don't really care what the name. I call this a Mickey Mouse box. It doesn't matter the name of the zone, okay? That's all to sell different courses and shit like that. To me, it's a red zone. Represents where sellers are. Whether you call it resistance or demand supply, that's up to you. If you want the actual technical definition of what a resistance is the first time it comes in, it gets resisted and it pushes down. A second time, technically, is also resistance. It comes in there and pushes down. But if we come in a third time, now you can see that resistance is starting to turn into supply. Then it pushes back down. Again, we come in here. Whether you call it a resistance or a supply zone, it's pushing down. There's more sellers than there is buyers. That's supply in a market. When you have more sellers than buyers, it's supply. Again, we come in here. Some traders call it resistance again, stronger resistance. Some traders now continue to call it supply. Supply is pushing the market down, okay? Can we find now a green box very similar to the red box? You can look now and figure out where it could be, but I don't do that. I start it from one zone and I stretch it into the future, and I continue to watch that zone and see if it continues to hold or if it breaks down, okay? So the zone that I chose back here in April was this bullish flag pattern. This was a big 3-day push. That body closed above. We talked about this point of control on earlier this week and why that was important, the candle body to follow and figure out the point of control. But also when it came up here, it consolidated. So what I did was I trapped that 3 days of volume. And what was the probability? It has a high probability of continuing to break out to the upside. So we did. But what I did was I continued to stretch that zone into the future. And then I see when it got rejected from the all-time high, it kind of paused in that green box and it moved back up. When we came through here again, now we had a daily candle that physically closed below it. So I did flip it red at that next day. But when it opened bearish, ignited, and continued to push down, create the low. Then when it came back up, I was watching to see if it would get rejected in here and go back down. It actually closed above the zone. So then you got to flip it green. Next day, it opened again. Didn't really move, came back down all the way down, but look, got a higher low and closed right below the zone. And then the next day, that's why it's important to watch the open of the candles too. It was a bullish ignited open. There was no drawdown, there was no push down, there was no sellers. It was all buyers that brought it right back up and closed it in the green zone. And then look at the next day, pull back in the green zone, and then we fly out of there. So this was a break. Yes, it did break, but didn't really break any structure below us. It continued to build, hold higher lows, and then just barcode bearish, bullish for about a week, and buyers accumulated more and took it right back up. So with this same zone, same size, I'm not altering it, I'm not changing it, I'm stretching it into the future. You can see we are diverging away from this green zone. We have not came back into it. There was very close opportunities here where the sellers were pushing it down on May 29 and stopped right there, and 1 month later, June 30th, they brought it right back down. But those are what we call equal lows in the market. Those are our tweezer lows, equal lows. So these now, when I move to the daily, are points of interest. Okay, that was a critical point of interest. When it came down, it stopped right there at 32.45 and went right back up. Again, we came heavy down with this downtrend, lower lows, lower highs, lower lows, lower highs, big lower low. They opened it bearish, ignited, and look at where it came down to, and it stopped right there again at 32.45 without entering the zone. So we have no new lower lows established in the market. It's all equal lows. That helps the depth of market. Okay, when you start to understand a little bit more advanced depth of market analysis, you're going to start to understand why Ron talks about how important equal lows are, because it strengthens the depth of market below us. More pending orders will come in and support this green zone when it sees equal lows without breaking a new if this just broke just a little bit, it would have changed up the whole algorithm above us. It would have more offers would have been placed in the market to start selling the market down, because it creates that new low. You know, you break a support level, but here it's giving us clues that it's still holding. And if you picked up on this, then you had a nice bullish move, but we got that resistance, pull back again, higher lows. There's now we have bodies, points of interest now, bodies. This is an important level as well. Why here? Because you got a body that closed. Yes, it did push down. That's the range how low went, but it closed right there. This body opened right there. Yes, it did come down, back down right there, but it closed above. And then we pushed with that move all the way back up to that all-time high zone where we could have broke out and got new all-time high, but they reversed it hard, that midweek reversal, and look at where it came all the way back down, and it closed again right at that yellow line, came back up. Now we're pushing back up. So when we're coming back into this red zone, about 50% of it right there at 3,400, you see it's a rejection, a rejection, a rejection, and a push down. Okay, this is where we're trading at right now. But let's remember this candle. This is a big bullish candle, Friday, August 1st. This is NFP. Okay, so that did close above a lot of bodies, and it's a relatively strong candle. So can we figure out where 50% of this candle is, and also a point of control, and see how it's trading today? So how I figure out, sometimes I just guess where 50% is, but I don't want to do that when I'm doing like a daily analysis or a top-down analysis. I do that more when I'm trading the 1 minute or the 5 minute candles, but because I got to be fast when I'm trading those, so I don't have the time always to be pulling out this Fibonacci tool. But when I'm doing a thorough analysis, I have all the time in the world. So you see what I did there? I pinpoint where 50% was. It's a nice psychological number, 3,325. It's representing today's lowest point. So our lowest point is right there at 50%. Now what I do is I stretch that zone. I can see we came into it Tuesday, August 12, bounce back up. We came into it again Thursday, August 14, closed right at it. We were trading in it. Then we got a big bearish candle that closed Tuesday this week down there. That's where, you know, you could flip it red, but you see it just briefly, just a little lower low, and then came right back, and we had a big strong bullish engulfing candle yesterday. So stretching this again, you see now we tested 50% again, higher low. We're holding the zone right now. Stretch it into the future. So it's still considered support from NFP. We still have not broke that point of control. Buyers are still there. If we can flip today's candle, we have a lot of distance that we could continue to fill these wicks and make our way back up to this red zone. But we still have bearish volume on the daily that could easily come back down, test that, or break and come even lower. Okay, so now let's start to dissect a little bit of yesterday and today's candle. But before we get there, I just want you to acknowledge this big bearish engulfing candle that came down to start this week, Monday, August 11. Sorry, to start a week, not this week, but to start a week. Where's 50% of that bearish candle? Just so if we're coming back into here, we know where it is. Also, for education purposes, have we already traded into 50% and what were the results? So what I just did, open close of that big daily bar. Now I want to know where 50% of that bearish candle is, and it's right there. There's exactly halfway. So now I see we came into it on Wednesday, August 13, right into it. And what were the results? Resistance. They pushed it back down. Next day, it opened strong. Thursday, August 14, we came bullish, bullish, bullish. It actually broke, made a new higher high, but got rejected right back down. So you see this, that point of control, that candle is still holding the market right below, I would say, 3,370, right? So if we can kind of flip today, maybe we're going to cruise right back up to 3,370 and see if we can break it out and trade in here. But however, when I'm looking at up there, this is still a lower high from the body of that candle coming out of the big red zone. This big push up right there is a lower high. They pushed it back down. Even if I'm looking at today's high, it's still a lower high from here, here, here. So sellers are still in the market. They're still pushing it down. But we are developing something from that NFP point of control block. Okay, so this is where we get consolidation. We have sellers in the market who are still there, and we got buyers who are interested. This is where we get sideways trading action. Following yesterday's big bullish engulfing candle, we made a high. We closed right here. So let's figure out our point of interest where we closed yesterday and how we opened. 3347. There's no gap in the markets. There's no gap downs. It's a clean transition from a close to an open. We were initially bullish when we opened today, and it was short. It wasn't big, but that's our high of the day. So that's where I place a purple line. 3,352, I would say, is our high of the day. It's, if I look now, it's still lower than here. It's still lower than there. It's still lower than there. So I respect that there is still sellers in the market. Okay, the sellers pushed it down from the highest point right back to our opening price. Then they flipped the candle bearish, where it was bearish, 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 bearish. You see our low of the day is right there. That's my yellow line from 50% of NFP. Okay, I'm just going to change it now to make it purple to represent the low of the day, but right at that 3,325, and you can see it's actually exactly 50% of this green zone. Okay, so that's holding that psychological midpoint, and the buyers were there, and they brought it right back up. So this is where we're at right now. Okay, so they got a they got a lot of work to do to continue to push up against all this selling volume and get back to the opening price and maybe flip. And then if we flip, we could easily fill this wick. Like that could be a 70 pip scalp to come right up from 351, 352 to 358, 359. So I want to mark it yellow. If I see a daily candle flip, I could be just trading that imbalance from this purple line to that yellow line, collect myself 50, 60, or 70 pips, and, you know, dip out of the market. If we continue to break that, then we got to backfill these wicks. Okay, I've got my yellow marker right there. If we can continue to fill, then we're going to come up at right at the red zone. You see it? Look at the number of it, 3,380 psychological. If you want, you can put a yellow line there if you have to, no problems. I kind of go with the zone, but if you need to put a yellow line, put a yellow line there. Okay. But right now we still have this bearish volume. Okay, so sellers are still in control volume wise. But we are getting a little support from this zone, but we got to see what's going to happen. Sellers could easily continue to absorb these early buyers that protected the low of the day and come back down, come back down. Maybe we'll get to the low of the day and we break. If we break, where are we coming down to? I would say there's a body and a body. The green box. You can now just manipulate it yourself, bring it down to that point of interest. If you need to add a yellow line right there, okay? And then the only thing that will save it is that wick right there. If that can't hold, then look how much room there is for gold to drop back down, maybe create a double bottom in this area over here, okay? So right now, let's kind of dissect our daily candle, okay? Just looking at the overall pattern, guys, what do we see, okay? So when we're looking at patterns, pattern recognition, let's just go with this big bearish leg that came down. It stopped right there. That's support. Buyers were there. They brought it all the way back up, okay? It didn't come all the way back up to here. That's technically a lower high at 50% of that big red zone. Then sellers are pushing it down, pushing it down, pushing it down, and it stopped right here. 50% point of control of NFP Friday's candle, we held. So now are we going to break, come back up and break this purple line high and start to push our way up through here? You can, what pattern is that, guys? That's a double bottom with that higher low. You know, if I catch this on a 5 minutes, I'm looking for this to break and to buy, or I'm waiting for some volume to close above here and catch the next candle retest and then go up. Notice how it's there. That would be a technical double bottom, okay? If the sellers wanted to, on this day, yesterday, if gold wanted to sell down, it opened, look, there was no wick where it closed on Tuesday. They could have opened this bearish right there. They dropped it. If they wanted to, they could have really came down here. But the buyers stepped in and did not allow that to happen. And they closed it engulfed. So that was a statement by the buyers that they held it. They held that zone, and that's representing NFP's Friday and the new month, August 1st. That's a statement. That's like a strong move. But will it continue to hold up? Because sellers are coming back down in there. So this is going to be a strong, strong battle in here, guys, for gold. And we have this Jackson Hole Symposium, which will affect the US dollar this week. So, you know, maybe gold is just cruising in here to see what's going to happen with that US dollar. Okay, but if we break out, guys, we have we can make our move all the way back up. Then you got kind of the neckline. If it breaks through there, guys, that's all-time high. You know, we could continue to move. And then follow what's going on around the world with everything that's going on with wars and things like that. Peace talk. If there's peace talk, if we finally get peace in Ukraine and Russia, then gold will sell off. There is no peace talks. They're continuing to attack. You know, like it's not stopping. Okay, so that might create demand for gold. There may be there was a relief. There was cool off when Trump met with Putin and Zelensky. Maybe they were going to have some trilateral agreements and come to some peace agreements, but it doesn't look like it's happening. There's continuing missiles and bombing going on as I'm speaking. So, you know, maybe the market cooled off and saying, hey, you know, this is continuing. Maybe gold's got to go up. So we're looking for the break of today, okay? Let's go to the 4 hours now. Sorry, guys, I'm spending so much time on this, but it's good to know a nice analysis prior to trading, okay? Look at the 4 hours, okay? So when we came up, see, it came down, back up, lower high, right in there, back down, came back up, lower high, back down, came up, lower high, back down. These are all lower lows. Came back up, lower high. Now we came back down. Look at the big wick on our 4 hour candle. So this is just now when we got our 6 a.m. So this just recently happened where we got this wick. Remember there was that big drop into here. So far now it's coming back up. This 4 hour candle is going to close in 2 hours and 10 minutes. What happens if this 4 hour candle flips? Maybe going from 10 to 2 after Wall Street, maybe you'll get a bullish extension to continue to go through here and break. Right now we're in a downtrend, okay? So if you grab your parallel channel tool right here and you kind of, you know, you can connect the dots as much as you want, or what we can do is we can go with how it was originally moving. So this is how I had it yesterday, where it came up, back down, came back up, back down. Notice the dotted line. Someone asked me about this dotted line. That's the psychological dotted line of 50% of this trend zone, of this parallel channel. You see how it gains support at the dotted line, It could be support or resistance. In this situation, it created support at dotted line, did not come back all the way down here. So we came up. Now, let's see what's happening here. So notice how I placed the channel, what's already happened. Some traders will go and place it right now up there. I don't do it like that. I do it how it's where I get more physical touches, then I can see. On Wednesday at 6 a.m. yesterday, we broke with 4-hour volume and we closed above the channel. We continued to push up. Right there is where we hit the highest point of the day, was when we opened at 6 p.m. and I can see it coming all the way right back down. But now this trend channel, which could be resistance, could turn now into support, which it is showing. It came back down there into 50% and got a big rejection. So this could be possible where they're reversing the trend. Okay, you can see where it was coming down, like all down in here. Now it broke through and it could be retesting this and driving through here. Then you got kind of a reversal possibility in that downtrend, reversing from bearish to bullish. Okay, but if the sellers continue to push it back down, okay, then they could bring it right back into the trend channel, and then we're still back in that bearish channel. Then we could sell back down to this dotted line. If it comes back down to here, the bottom of it, that's where I have my daily yellow support, and I can see that that's where it already bottomed out. So maybe right there would be where the buyers then bring it back up, okay? But I want to see if the volume buyers continue to keep the volume above here, away from this trend channel. If the sellers continue to push it and close it in here, we're right back in that trend channel. And then that looks like just a false fake out, a fake breakout move. And then it's right back in the channel. And then sellers could come in and then we lose this NFP point of control and then start selling off. Okay. So that's how I do that trend. Someone will say, well, Ron, why didn't you just put it up there and we're still trending down? That's fine. If you do that, just continue to follow it. I like to see the move of the markets. I see that they broke through it and now it's coming back in there. We can look at the 1 hour now. Okay, so look at our 1 hour candles. To me, they're trading pretty decent. You had a nice bearish 1 hour move coming down, like multiple 1 hours. These are multiple 1 hour candles. Then they kind of consolidated down here. They reversed that move, coming right back up. We got to the highest point of the day. Now I can see it was 6 p.m. Eastern when the day opened up, and since then started push down, lower low on the hour, came back up, lower high, new lower low, came back up, lower high, big kind of elevator coming down, start 6 a.m. and now we're coming right back up to about 50%, or that point of control of that big bearish candle. So if I'm looking at 50% or point of control from this big 6 a.m. candle, I'm doing the same exact thing I do on my daily, on a 4 hour, on an hourly, or on a 5 minute. From the open to close, that 6 a.m. candle, there's 50% exactly at 3334, right at our green zone. Okay, so I know you're going to see a red box right inside a green zone, but I want you to understand that the big green box below us is higher time frame. That's from NFP Friday, August 1st. This red zone is just from the last hour, that big 6 a.m. bearish candle. So let's see if buyers today can maybe close above here, maybe retest this. Maybe we could continue to fill the rest of that 6 a.m. candle and break out. Or you're going to see now sellers step in and start to push this thing back down. Okay, so we're trading in it right now as I'm speaking. Okay, so we're coming right back in it. And what we got to do is, what you can do is go backwards too. You can take it now, look backwards. Okay, and then just for verification, you can see when it closed above, it was a green zone. When we came right into it, you can see the buyers were there and it moved back up. But we're not getting above 50% of that bearish candle right there, that bearish engulfing candle. I can see the wick came right up there. 50%, I'm not even going to use my Fibonacci tool. I'm just going to guess where 50% is right there. I'm going to line it up with that wick. White line for hourly. Okay, so if we can break through here, there's our hourly resistance. Just measuring a move. So I know if we can get up here to that white line, it's about a 62.7 pip move, 63 pips to get back up there. It could fill 63 pips, get back up there. It's a double top and hourly sellers are there waiting and drop it back down. If we can maybe break through there, there's your impulse break. Right up to 50%, you're up 80 pips. And then maybe you get to that daily location, that yellow line, and then there's our highest point of the day. And if you have a high breakout, there's the next daily, okay? You can see how everything is all in levels, okay? And I trade these lines. You can place alerts at each one of these lines. the more significant the line, like this is hourly white line. I place more emphasis on the yellow line because this comes from a daily. Hourly is just an hourly. It's representing this candle from Wednesday at 11 p.m. This is representing days of points of interest. And then the purple line is obviously the highest point of the day. Okay, so we're trading in it right now, but it got rejected. We'll see. This hourly candle is closing in 3 minutes. Okay, then we're going into 8 a.m. and then COMEX will start in 20 minutes. This is how it looks on the 5 minutes. If you're a 5-minute trader, this is what you're looking at. Okay, so we hit now the highest point of the day was actually 6:05, and since then lower low, lower high, lower low, came back up. There's that hourly white line, lower high. That big sell-off at 6:30, 6:35, 6:40. There was a little bit of a dead cat bounce at 6:45, continued 6:50, 6:55, 7 a.m. 7 a.m. we hit the lowest point of the day, and now we're coming right back up this hour, trading right in that red zone. Okay, so we might consolidate, but now you can see we've already established something. There's that big leg selling down. We found a bottom. Okay, we're recovering right now. It's coming back up, but it hasn't recovered the whole move. We're recovering 50% right in here. So it could definitely come back down. It could get a double bottom. It could get a higher low in here. It could come back up here and then start to break out, or it could come in here and get rejected back down. Okay, so that's why I pay attention to these zones and watch. Can the buyers close above here, or sellers are going to continue to push this thing down? We're kind of barcoding in here. So this is the neckline. Bullish, bearish, bullish, bearish, coming back up now. This candle is going to close in less than 2 minutes. So this is what we got going on. What I'm going to do is add our SST daily bar indicator beside us, so we know our opening price was all the way up here. Our highest point is all the way up here. And then sellers were in full control where they dropped it all the way down. There's that big drop representing the lowest point. There's when we hit the lowest point, 7 a.m. when we started the call. And it's coming right back up. But we have still this big selling body above us. Now we're getting into that point of control right here of this big bearish move from that 6 a.m. hourly candle, what I just showed you. Okay. And then if you want to add some indicators, EMA 9, we are currently above the EMA 9. EMA 200 is right up here. So it could, break out, and then you're hitting that big EMA 200 would be a lower high. Maybe they push it down for a retest of this zone. Okay, so that's what we're going to follow. We're going to follow gold for next little bit. We're going into 8 a.m. in 45 seconds. 8:20 is COMEX, and then 8:30 we do have some U.S. Unemployment claims coming out and Philly Fed manufacturing. Our red folders, flash manufacturing, flash services, are at 9:45 after Wall Street market opens up. Okay, so let's continue to watch gold. Let's watch how we move into 8 a.m. Let me know if you have any questions. Good morning, everyone on YouTube. Thank you guys, almost 300 viewers. If you guys can hit the like button, subscribe to the channel, we do appreciate it. Okay, thanks guys. So it just a reminder, okay, just so we're all on the same page. This green zone, this green box is 50% point of control all the way back from Friday's NFP, Friday, August the 1st. It's August 21st today, okay? So almost 3 weeks later, we just traded right into 50% exactly, right in there. And look at the response coming out of there. So if you had a pending order waiting like at 50% in there, I'm showing you guys how you can kind of nail some setups. Like right there, you're up 100 pips right now. Like you could hit your daily goal basically by just identifying point of control from big body candles or big news candles. Okay, so will it come back down for a double bottom today? or are we going to continue to push up on this bearish candle? Okay, and then we have white line hourly resistance and our 200 EMA right there. Let's see, will we actually close above here? Will I be able to flip this red zone green and even make it stronger in a deeper green zone? Sherry, good morning, welcome. Okay, guys, and there was a signal that was sent out to the group. Some of you guys got it already on a buy on gold. I'll show you right here. Buy at just 3,331. So right there, coming out of there, closed above, got a retest, and now it's moving into that candle. Okay, we're moving a little higher. We're at 336 right now, so it's about 50 pip move. So congratulations if you guys got it so far. There was that 331 right there. There's that nice big push coming through there. Okay, so it's going to close in 2 more minutes. Can we close with some good strong bullish volume? Are we going to get a pullback? Is it going to close above here? Let's see. Is anyone in buys on gold, or is anyone still, in a sell from over here? Okay, I just want to reiterate, guys, that's a really nice sell, like if you took that. But it's also important to also take some money out of the markets. We talk about this on a daily basis, because sometimes what goes down can come right back up, and sometimes what goes up can come back down. So if you're satisfied and you got it to a point where you're happy, always reduce your risk in a trade by taking your stop loss and going to a break even, and also get in the habit of learning how to take some profit out of the market. You can use a trailing stop loss, or you could use like a partial method. I use 80-20. Some of you guys maybe use a 50-50. You take out 50%, you leave 50% running. Whatever it is, try to compound and accumulate as much pips as you can, because then you're going to gain your confidence and you're going to watch your account grow, and you're going to get better and better and better. Your confidence, your experience is growing, your technicals are growing. Then you know exactly what you're looking for while you're compounding your account, and then you could really start to get that snowball rolling. But it's always demoralizing if you're in a nice trade for over 100, 150 pips and you don't do anything, and it comes tumbling back down to where you entered, and then you're not at a break even, and it starts going in drawdown and you stop, that could demoralize you for your next trading for weeks to come. You could go into a massive slump. I've been there, and I know some of you guys have too, where you do something like that and it takes you a couple weeks to shake it off and recover from it. And then that could start that cycle where you start revenge trading, you get mad, you get upset, you start doing silly things, and before you know it, all of your hard work for multiple months is gone in just like that. And I guarantee you everybody here has gone through that. But we have to learn from that, okay? You got to have discipline as a trader. This is one of the, I call it a profession. Some people say, Ron, trading's not a profession. It's just a bunch of people just going on the computer and like playing a video game. No, a lot of traders do this, like treat it professionally. Whether you are, you have your license, you're a professional trader, that's a different story. But to come in here every single day and do this every single day, you got to have some sort of discipline. This is money, guys. Like, this is like getting a paycheck, just like you going to work every single day. You go to work, you come home, you made some money. Same with trading. If you took this buy and you're in the money, you got to secure a little bit. Same with if you were in that sell. Look, if you didn't do anything now, I know it sucks. That drop was beautiful. But if you think and you get greedy and you want it to continue going down and going down, this market does this to us, okay? Greed destroys us. That's why I leave a lot of money on the table, because I've been greedy and the markets have humbled me. Look at that's 140 pip drop, and it's look at it's retraced the entire way right back up. It's like as if this move didn't even happen. Okay, and now it's really driving. Okay, so we're at our 200 EMA. We still haven't even came back to pull back into here to maybe look for a buy. Okay, so it's still running. You know, maybe I want to look for entertain a pullback buy, but I got to wait for it to come in here again. Okay, maybe we'll come back in. Maybe we'll get a possible retest right there and go back up. It could come a little deeper, you know, down into there as well. It could be a double bottom all the way down there. Okay, but first line of support was this zone. We'll see resistance if it will turn to support right around there, about 3334. See for maybe a pullback buy in there. Okay, so we're look at the daily candle. Okay, so the buyers are really pushing it up right here. And if we tag that hourly white line, you know, like you can see from the how it came up close to it, went back down, came right up to it, and then that was that big drop. So it could come all the way right back up there and, you know, then start its retracement down. Okay, so we could either look to sell maybe up here, or we could look to buy pullbacks down in here. Okay. Yeah, Trisdell, I understand. That's why you told yourself before you were holding and wanting $1,000 days and only earning $43 per hour in your current job. And then I don't want to close profits at 300 or 400. Change my mindset. Yeah, you got to appreciate the value of money. You know, some of you guys working for 20 bucks an hour, 30 bucks an hour, 40 bucks an hour at your work. You know, sometimes we have trading days where you make 100, 200, 300, 400, $500 and you still want more. That's why if you're working, you appreciate the value of work. You know, if you're working 8 hours, 10 hours a day, travel distance to go to work. I know if you live in Toronto, you're to go 5 kilometers into down, it takes you 30, 45 minutes to 1 hour just to get to work, drive home 2 hours. You work your 8, 10 hour day. It could be turning into a 12-hour day. And some traders here, even, you know, can make 300, 500 bucks a day with prop firms and getting your percentage and things like that. And you still want more and more and more. And I keep having this conversation saying, you know, you're getting greedy. You know how hard it is to go to your job and work for, and then now you're making it in like 1 hour, possibly. If you bought this since 7 a.m., it's 8 a.m., 1 hour, or if you sold that right there, you make your daily goal. Get out of these markets. You know, you could have another supplemental income coming in. Still go to work, do your work, but you could have another supplemental income helping pay off your debts, helping your family, things like that, guys. But the greed kills us in trading. But learn the discipline of not getting greedy. Just be humbled, you know. Get some money out of these markets and continue compounding the account. Have goals. Obviously, we all have goals. But don't have unrealistic goals that you set the bar too high and you never reach them, and then you do good, but you're always in disappointment because you're not hitting those goals. Everyone wants to make $1,000 a day, but you know that's setting the bar high. Let's see if we can make $100 per day. Let's see if we can make $10 per day. Before we get to $1,000 or $1 million, let's start off small. Set the bar low and gain your confidence. See if you can make, I do it with pips, not money, okay? Because money can, $1,000 can mean, if you're trading with $1 million account, or could be completely different from someone trading a $10,000 account or a $1,000 account. I do pips. Let's try. I tell everyone, get started and see consistency. See if you can gain 30 pips per day and track it, journal it. 30 pips a day. Someone will say to me, Ron, that's too easy. 30 pips is 1 5-minute candle I can. But I say consistently. Can you do it today? Can you do it tomorrow? Can you do it the next day? Can you do it every single day this week? That's consistency. And then see if you can do it 2 weeks in a row. See if you can do it 3 weeks in a row. If you can, then increase it a little bit. Don't go from 30 pips to 300 pips. Go from 30 pips to 50, or double it. Go to 60 pips per day. See if you can hit 60 pips per day. My goal is to hit 100 pips per day. That's my goal. If I hit it, I'm done trading. I can trade more. Yes, just like you guys, we can definitely trade more, but that's my daily goal, 100 pips. I hit it, I'm done. I have other important things to do than just sit and watch candles all day. Okay, so we made it all the way right back up to that hourly resistance right there. So let's see now if it maybe will pull back. There's our 200 EMA and our 9 EMA. Some of you guys are following this where, you know, it comes back down and maybe they're crossing over. So maybe if we're looking to buy a pullback, it could be coming like down into there, I would say. Maybe that's when those EMAs are crossing. Maybe it might hit that zone down in there, and then that might be an opportunity to continue to buy it out. We are about 8-9 minutes away from COMEX market open. There's going to be some volatility because now COMEX will open up. Maybe gold will come back down. Maybe we'll continue to break, okay? But I'm also watching the daily candle here. I want to see, will it flip today? Will it come back down? Great move, guys. This is great price action, okay? In my opinion, take a snapshot of this price action. Okay, this is really nice. This is where, take a snapshot of this. This is where you don't want to be trading in here. It's just bearish, bullish, bearish, bullish. It's consolidating. What you do with this volume is you trap it, okay? Eventually, you know that it's going to make a move. At some point, it might have to consolidate for 1 hour, maybe 2 hours. Look at this, started from 3:30 right after London, and they didn't drop it until 6:30. 3 hours of sideways action, okay? 3 hours. But what I always tell you, there's 3 directions of volume. 3 directions. That's it. There's 3, okay? So it's either going to continue to trade in this box here, which it did for 3 hours. That's one path. Path number 2 is buyers will accumulate more, maybe close it above here and retest this, and then it will redistribute the volume to the upside. This is our sniper trap and gap strategy. This was our basic strategy, first strategy you'll ever learn in trading. Very basic. Or sellers will close it below and then maybe retest this and you get your drop. There's that body that closed below. But notice, then you got to use a little bit of your price action analysis and understanding. Sometimes it will not always just come back to retest. You see, it closed right near the low, and the next bar opened ignited bearish. That's that firecracker. As soon as it broke down, it took out that low wick and just continued to drop. Again, closed near the low. Next candle again. Did it come up to 50%? Did it retrace back up? No, it was strong move. Bearish igniting candle, small wick. Again, a firecracker pop and drop. Okay, this is when it came back up, but that's it. It was below 50% of this candle. Then they continue dropping it down. Now you closed above the structure and it starts turning into support. Some consolidation right at the zone. 8 a.m. new hourly candle, bullish candle. Still, I'm waiting for a retest. Has not came in. Even if I'm looking for 50% of this candle, it has not came back in. If you stretch this zone, now you see it could be creating a left shoulder. This V recovery is the inverted head. And if it comes back in here, we're trading right back in the right shoulder for maybe another accumulation phase. Okay, so it could come back in here and just accumulate again. And then are we going to continue to go back to the upside? Or is it going to just continue to accumulate and then maybe they're going to push it down in here? That would be the best buying opportunity in here. You're back in that green zone. Obviously, the second bottom, the lowest point of the day, is the best bottom. But right there is a pretty legit area. But it could just come right back in that zone and then sellers could and push it right back down. So when we come in here, we got to watch what it's doing, right? You know, there's levels and there's zones to this game. There's not just one cookie cutter approach to trading. Okay, so it came to that hourly white line. There's a rejection, and now the sellers are coming in. Okay, so let's see now if we come back in the right shoulder. Will we continue to consolidate in there? Will we break below it and come into here? And we got COMEX in 5 minutes. Okay. Congratulations if you guys bought. Guys, the Discord hopefully got updated right here to show you the distance. Where are we at? Gold. Okay, Dave got a little upset over here at gold at the last 24 hours, so he tried to make it his bitch. So apparently he did here. Hopefully Dave didn't get rattled. Okay, Dave, control yourself, please. Proper risk management, no revenge trading. This is just Dave, feeling out the move. Okay, got good lot sizing, good recovery, but it was this move right here, guys, what we're watching. Okay, so big shout out to Big Dave over there. Frank, you don't think there will be a pullback? Possibly, that's that one bus. If you're waiting for that bus, sometimes the bus driver won't come back to pick us up. We could be waiting for 20 minutes, 30 minutes, 45 minutes, 1 hour, 2 hours. We're like, where's the bus driver? And he made his daily goal and the bus driver is not coming back. Okay. But just continue to wait it out. I'm waiting patiently for maybe a pullback down in here. But if it doesn't come, then you got to have some rules. Someone will say, well, Ron, why don't you just continue buying the highs? Because sometimes when I continue to buy the highs, that's when they slam it down on me and then I go into drawdown. And then I'm like, why did I do that? I could have waited. So guys, trading is very psychological. It plays with you. It plays with you on a daily basis. So you have to have some strict rules when you're trading. Sometimes when I'm watching a move just get away from me, I know I could have bought the high, but if you practice that every single day, that's why traders say don't FOMO trade. No more FOMO. Like FOMO's fear of missing out. Talk to a lot of FOMO traders. I guarantee you they can't stay consistent doing this on a monthly, yearly basis by just trading FOMO. Okay? You gotta eventually learn how to trade pullbacks or patient and discipline. How many traders, how many mentors do you watch that say patience and discipline? Patience and discipline. Have discipline as a trader. Be patient. Okay? I'm sure that mentors don't just say it to sound smart just by saying patient and discipline. They actually preach it and believe in it. So, this is me being patient and disciplined, waiting to catch a pullback. So I know it sucks when we're live because it's not exciting when we're not in a live trade. But I want to show you guys how to patiently wait for a trade. I could just buy right here if I want, but what is that going to do? It's just going to teach you guys how to just FOMO trade. I want to try to the best of my ability to be patient and disciplined and wait for sound pullbacks. Sometimes there's intuition where, the way how the market is moving, then you'll see me take a trade on impulse or at FOMO, As much as I'm waiting for it to pull back, sometimes the market doesn't pull back and it wants to continue to go. You'll see me do that, but I'll explain it to you. I'll explain it before and after what I'm doing. Just like yesterday when I took that buy on US 30 during Wall Street, and then when I saw it didn't do what it wanted to do, I closed it out at 20 pips, and then I switched my sentiment and I started selling with it. I explain it to you. I'll show you guys my thoughts, everything. That's why I believe in live education, because there's no holding back. Whatever I do here is live. You can go back and you can back test me for the 5-6 years of videos on YouTube. And see from day one. Watch the first video we ever released. I'm going to do it like a reaction video to our older videos from Dave and I from day one. I guarantee you we're talking about the sniper trapping gap box. We're talking about volume closing above, volume closing below, accumulation, point of controls, point of interest, pullback trading, 50% of candles, and same thing. We're doing the same thing today to show you that it does work. There was always another trade. Kareem, you're absolutely 100% correct. But there's a lot of traders that don't understand that. They don't understand that there's going to be another trade. Unfortunately, they only understand that they have no patience. They're very impulsive, and they got to trade everything. So, but once you learn that discipline, guys, your trading game will definitely change. So now COMEX market is open, okay? So if we look, guys, the white line is there for a reason, okay? I don't just put these lines on the chart they're there for a specific reason. Why did I put that white line on that hourly right up here? It was from that bearish body that came down at 11 p.m. that we see. You see, we just hit it right now and we're getting rejected back down, okay? So that's how it looks on the 5 minutes. We just tapped into that white line and it is pushing down. Now let's see, we're back in that consolidated zone right here, this neutral zone. Will it hold in here? There's our 200 and our 9 EMA meeting right there. So some of you guys like to trade this where the 9 is crossing above the 200. That's your golden crossover. That would be a good opportunity. So let's see if it comes down in there. It could bypass this and break more into the green zone down in here. Okay, 50% of that nice big bullish candle that closed above is approximately like right around there. I'm using thicker lines so that because someone said to me, Ron, yesterday, would you mind using thicker lines because we can't see those lines? So they are a little thicker, okay? So just putting it out there for you guys to see a little bit better. Okay, so the market now is pushing down. It's not like bearish breaking down completely. It's just a cool off. Okay, markets need to cool off a little bit. It could continue trading back up, but however, guys, don't neglect that we still have this bearish bar on this daily candle. Okay, there is still this bearish volume from the opening price that is still coming down. Okay, so it could come all the way back down into here. Okay, I'm just going to check my gold spreads right now. Okay, I always like to look at my spreads prior to taking a trade. Okay, so my gold spread is 1 pip right now. 2 pips right now. So it is really starting to fluctuate. I like to trade when it's normally, like for myself with this broker, half a pip, 0.4. Right now I can see it's fluctuating from 1 to 2 to 1.5. So it's showing me that there's a lot of, when the spreads move like this really quickly, there's a lot of volatility. There's a lot of volume coming in the market. This is COMEX market open right now. Guys, thank you guys. Over 300 viewers, man. This is awesome. We've had like back-to-back days with 300, 400 viewers. This is awesome. Thank you guys so much. I hope you guys are learning from SST. I hope you guys are really, really learning and changing your mindset, your psychology of trading, managing your risk properly. If you are doing that, you're on your way to be a successful trader. Okay? It just takes time, takes experience, but just keep at it with the right mindset. And guys, we're all going to have shitty days in the markets. I'm telling you, we're all going to have bad days in the markets. But don't let those days rattle you. Listen to me. Listen to your uncle telling you. I've been through this many, many times. The best thing to do when you're having a bad day in the markets, when you can't read the markets, you've hit maybe 3-strike rule, walk away. I cannot tell you how just walking away from the computer, how much it can save you. Just walk away. Walk away. Go for a walk. Go cool off. Go to the gym. My favorite thing is going to the gym. I love going to the gym when I hit my daily goal because I'm excited to hit the weights and lose some weight and just relieve some stress out there at the gym. Also, when I have a bad day in the markets, I love going to the gym because then I take out my frustration on the weights and I'm doing something good for my body. Okay? So just go to the gym. If you don't have a home gym, get a gym membership and just go to the gym. Spend 1 hour there, even if you just go on the treadmill, whatever it is. Just get off of and then just think about what you just did. Don't get mad at yourself. We all make mistakes, but we got to learn from it. And then when you come back into the market, you come back with the right mindset and you're ready to go. You're ready to make your mistakes better. Learn from them, okay? Because if you have a shitty day trading and you just sit at your computer and you keep trading, you're not gonna read the markets right. You're gonna revenge trade. You might be counter trading. You might be increasing your lot sizing to make up your losses, and before you know it, you've blown all of last week's gains. All that hard work you did last week is gone. Maybe a whole month of hard work is gone. Maybe like for some of us that are crazy, we'll give up 1 year of hard work. Believe me, that was me. I was that guy. Multiple years I gave back, and I took 6 months off of the markets to recover from that. So it can be demoralizing, especially if you're already got the ball rolling. Don't ruin it. Okay, so now we're coming down. Let's see if we're going to tap into this green zone near 50% of this 8 a.m. candle. Maybe I'd like to buy a pullback down in here. Okay, so you see when we tapped into that hourly resistance. Am I surprised that the market is coming down? You know, I'm not surprised. That's why the white line is there. okay? So now it's 8:25. This is after this candle closes, we're going into 8:30. And remember, US has their weekly unemployment claims, okay? Good job, Boom. Good job, Boom. I like that. You had not that you had a bad week in the markets. I like how you recovered. So I'm just reading what you wrote here. You had a bad week, couple weeks back, took the following week off, didn't watch any lives, nothing. Perfect. Came back much better and back in the right mindset. That's excellent, okay? Boom, that shows your maturity. Taking a week off. A lot of traders can't even take 1 hour off of the markets. You took an entire week off and you recovered, and now you're back at it with a proper mindset. Remember, the markets are open every single day, Monday to Friday. You can even trade crypto on Saturdays and Sundays, okay? You could go 7 days a week if you want, but that's not healthy. You don't want to do that, okay? Take days off. Yeah, guys, hit the likes. Come on. If we got over 300 viewers and there's only 136 likes, hit the likes. We do appreciate it, guys. That's all we ask for you guys on YouTube in return. Okay, so this is a bearish hanging man candle. Opened bearish, came down, caught a wick. I'm watching to see, will it come into 50% of that blue candle? Will it come a little bit deeper down into our green zone? Will it close like this? Will this candle start to flip and come back up? 2 more minutes to go, and then we're going into 8:30, okay? And a good zone where I like is right over here, where was this bullish zone right there that held. Look at this neutral box, what I'm doing. Stretching it across, okay? You can see now it's just like right at that candle right there. So that's, if it can come in there, I'd like to maybe set up for a possible buy coming in there and going back up. However, it might not come all the way down in here. This candle could flip and then start that next leg up, working up at 8:30. So I got to watch that. Now they've flipped that bearish candle. Remember that bearish candle opened, came all the way down, did not engage right there. There's 50% right there, and could flip back up bullish and start a leg back up, or at 8:30 it could come back down one more time, okay? So let's watch the final close of this candle. It's still got that bearish head coming back down. Jet, you want me to speak in Hindi? Baji. Baji? I know what Baji is. Hey, how's my Hindi? Baji. Do you know what I'm saying? I gotta learn Hindi on here. If we get the stream to 1,000 likes, I'll speak in Hindi here. it'll be funny, but we'll do it. Anyone know what Baji is? Do we have any Indians out here? Baji. Baji. Yeah, you got it. Baji, to see great means bro, you are great. You see? Your man knows languages. I got culture. I know a lot. Oh, okay, guys, here we go. See that? Okay, that just opened with the news. Bullish, ignited, just popped right back up. Let's see if it flips back down. Okay, now we got news. Did you guys see that? Okay, how it just opened bullish and just drove, and then they brought it right back down. Okay, so this is volatility now. Now we got news in the market. I just want to look at these unemployment numbers real quick. 235. Holy shit. Okay, big difference. Guys, we were looking around to be about 225. This is 10,000 more than last week, 10,000 more than their forecast. So look at from last week, this week. What the hell happened? Why are so many Americans applying for unemployment benefits? That's a big, so the US dollar is dropping currently right now, okay? So the US dollar had a big bearish drop, might fill in that gap. That's why this candle opened bullish and just came right through here, okay? So you can trade this candle if you like. I'm going to wait for this thing. Look how it came back in that zone. Let's see if it breaks its bullish open and comes down deeper down into here, okay? Okay, those numbers are bad. Okay, those job numbers, okay, so if this can maybe start to make its way back up, maybe it might be a good opportunity maybe to look to continue to buy gold back through here. Still holding its strong open, okay? It hasn't, turned into a shooting star candle. It's coming down here. Again, it's better to buy deeper in the depth of market if we can. However, maybe if the body keeps building, we might not get that opportunity, okay? And the Philly Fed manufacturing news also came out. Let's just take a look. The Philly Fed, negative 0.3. Holy shit. Wow. Okay. Those unemployment claims are week over week. So you can see a big dramatic change in since last Thursday to this Thursday. 10,000 more individuals are applying for unemployment benefits. Tony, U.S. companies quietly laying off people and hiring only when they really need to do so. Companies don't want to get bashed. No, I understand. I got you. I know. I'm reading all about those things. But when I say those things, Tony, no one believes me. So they say, no, the American economy is doing great and things like that. So kind of got to be careful with what I say. Guys, wow. So nice candle, okay? It's going to close in 2 minutes, still building. If it comes up one more leg up, I'm going to look to buy. I'm going to go in. Okay, those job numbers are not good for the US dollar, so possibly good for gold. I'm going in to buy. I'm going to place my stop loss below that, that buy zone where I was looking at. I'm going to place my stop loss below there. See if we can kind of maybe close above this hourly resistance and build our way back up to our opening position on gold, back to the daily opening price. Okay, so again, we got to get back up to that hourly resistance. I would be about 25 pips in profit from where I entered, but I'm looking more to see if we can get maybe up 50 pips up in here. Maybe full target would be back to the opening price of gold. Okay, but we got to get 5-minute volume closing above our hourly resistance. Maybe we can build that into support. 1 more minute to go into this candle. Okay, so the reason why I'm going on a buy, I bought that pullback. I didn't get deep down on that pullback. I wanted deep down in here, but when I saw that Philly Fed manufacturing news come out also, then on that it went up. Last pullback I bought right there. Okay, so regardless, I'm in on a buy. I tried to get as low as possible down in here, but those wicks held it up and came back up. Now I gotta watch closing price, point of control of the candle. I'm in the trade now. Yeah, I'm in a buy, guys. I'm in a buy. There's about a 20-second delay on YouTube. I have it on ultra low latency. That's to do with YouTube, but I'm in a buy. Okay, so if you're just looking for a quick scalp, sometimes that's all I'm looking for a quick scalp. Right there's 30 pips. Okay, wow. Okay, good push, closing in 30 seconds. That's 30 pips, just like that, with zero drawdown. If you want to grab 30 quick pips, you know what I was saying? 30 pip goals for some traders can get 30 pips per day. Right there, okay, and then you can reduce your risk, guys. That's 40 pips right there. Okay. Let's follow this body, okay? You can reduce your risk if you want, okay? But it could come, okay, I'm going to reduce my risk. I'm going to a break even, up 45 pips. I gotta have some rules, okay? We got a bullish ignited candle with no wick. Can we just continue to drive up a little bit? 50, 60, 70 up there. If it needs to pull back, now your hourly white line is your supporting line right there, okay? Will it come back and hold that hourly line? If 50% of the candle is a little bit deeper down in there. But let's see if this hourly white line, which was resistance, now with volume above, can get a wick right here and get some support from some buyers. Samuel, your stop loss is in 20 pips profit. Nice. Okay, so right there, you see that initial wick we just got. So that's to show you how a resistance can turn to support with volume above. Right there. You see how I move that red line right exactly there for you guys to see that. Now, if we can kind of flip all of the bearish volume that opened this 5-minute candle that took us down, then maybe we can flip the candle and drive a little further, okay? But I'm at a break even. This candle with the volume could come all the way right back down and hit my break even, okay? And that's gonna suck for me because I was up 50 pips. But I didn't do my 80-20 rule, okay? So you see how sometimes if you don't follow rules, the market can come back down and punish you. Is this me trying to get greedy to hit that yellow line? Possibly. Will the market punish me? Or are we going to hold this point of control? It came down a second time, right again to that red line. Buyers there, that shows me that buyers are pending. They're adding more buys in the market. They're pending. See how it held it there? Now we flipped in a bullish pin bar. So all we got to do now is turn in a hammer and we can continue to drive and fill this imbalance right back up to this yellow line. I can see on the 5 minutes we do have some resistance, right? You know, there's the bodies, there's some wicks. But let's see with this news if we can kind of break right through there. Okay, so far we're holding this point of interest. That hourly resistance turned to support. There we're coming back up. Flip this candle. And then if it starts to drive through here, I'm going to start to scale out some profit. We have hit the likes on YouTube, guys. Hit the likes on YouTube if you got some pips on this. Maybe you're at a break even. Maybe you've scaled out. Okay, it's trading around 50 pips. 50 from entry. Okay, there's the hammer flip. As soon as it starts to fill a little bit, could be 55, 60, 70 pips up there. But that's good education to teach you guys how a resistance can momentarily turn into a support. Exactly at that line. Okay, 2 more minutes to go. Sellers are still here protecting this. Then if buyers cannot kind of, you know, break it strong up here, next candle could come back down to retest this or even break with more bearish volume. So let's see if we can flip the candle close strong. We're almost flipping today's whole daily candle, you know. It's not easy to do this. iPad, is that you, Mohammed? You're done with 1.65%? Good for you, brother. If that's you, Mo, congratulations, bro. Drop to 1 minute, sure. Jay, we're on the 1 minutes. Okay, so you see the 1 minute resistance, guys. You know, even 1 minutes, they build, you know, structure. Look at it. Okay, so there's that 1 minute structure right there, which is a red zone on the 1 minutes. Coming back down, we're retesting what I just showed you, that hourly. So it's a double top on the 1 minutes. So this could continue to drop down, you know, and hit my stop loss at break even right there, unless we can gain some support coming back up. So we got 1 minute maybe in a consolidated zone on the 1 minutes. Okay, so you know, like the 1 minute candles are struggling to break out of here. Now it's coming down, guys. Unfortunately, if it tags me down there, you know, my trade goes to a break even. I just pissed away 50 pips of profit if it comes down there. Okay, hopefully it doesn't, but you know, that's me. Again, maybe possibly am I getting greedy after 50 pips because I'm looking for that day to that fill to that yellow line. So this is where the market will come back, maybe retrace back. I don't want it to continue to break down and go into stop loss. So that's why, you know, it's a break even trade at the end of the day. It sucks. Believe me, it sucks. It does suck when it happens, guys. But I want you guys to learn from my mistakes on here. Okay, so that, again, closed bearish. Now we're below the 9 EMA on the 1 minute. So next bar comes right back down, and I'm stopped out, okay? If you look on the 5 minutes, it's a big bearish candle that closed below there. So we're back down in here. So yes, it could continue to come back down unless buyers can bring it right back up and close it back in that 1 minute zone up here. This is how it looks on the 1 minutes. Okay, so can we get 1 minute buyers back in that consolidated zone? I'm still in this, believe it or not, but you know, got to get more strong volume closing inside here, build, and then maybe I'll get that breakout. Maybe the market will reward me. This candle's closing in 10 seconds. Okay, so can we engulf this bar? Can we close above it? Yep, good close. Okay, we engulfed it. Now a quick little retest again of this same zone. Grab a wick right there, perfect. Flip, let's fill our zone and maybe retest this resistance while we're still in profit here. Let's continue fill. Starting to like the 1 minutes, Rob. You're gonna fall in love with these. Guys, 1 minute candles are, in my opinion, the best. When you learn the proper mindset to scalp, you're gonna fall in love with 1 minute candles. I'm sorry. Like they're clean to watch. Like right now, coming back down to 50% of this 1 minute candle. Let's see if it grabs its wick. You know, otherwise it's going to be a bearish 1 minute candle engulfing, and then we'll come down for its new lower low. So we got to pick up our buyers at that point of control of this candle or get a higher low. Now you see it's barcoding, bearish, bullish, bearish. Let's see if we get that higher low and continue to push back up with this 1 minute trend that we got going on. Otherwise it's going to be a bearish. See how it came down? It didn't engulf all the way, but we still got that selling volume still pushing down. So if it breaks, then it's coming right back down to hit my break even. But that's not to say that that's it, I'm done trading or I'm not going to watch it anymore. Just that trade hit a break even. I didn't do anything when it went up to 50 pips. But if we continue to build higher lows, maybe we'll get a higher low build down in here. Maybe I went too quick to my break even, but up 50 pips, you know, that's a good sound as a scalper to go to a break even when you're up 50 pips. My problem was I didn't scale out. That's my problem. Now the market is coming back down right there. Okay, so right there. It sucks. Fuck. Why didn't I do anything up there? My stupidity. Okay, 50 pips. Exactly. 50 on the dot, and I did nothing. Okay, so I just exited that trade with a break even. No win, no loss. Learn a lesson. My lesson was, I'm telling you right now, I'm telling you my live lesson. I got too greedy. I was hoping that it would break. I got excited that we were going to come right back to the opening position, 3347. And for that, just that, see how the market came right back down. Okay, so it happens, guys. It happens to me, it happens to you. Now what we got to do is, I didn't win any money, I didn't lose any money, I got to regroup. I got to come back in and watch. A new 15-minute candle is opening up in 2 minutes. Look at the 15 minutes. Okay, nice big bullish move. Came right back down. We got a good 15-minute candle that broke out of here. That was that 50 pip move that I didn't take anything out. It got rejected back down, but I got to watch this closing 15-minute volume in the next 1 minute. It's barcoding. Bullish, bearish, bullish. If we get good 15-minute buying volume closing above here, maybe we'll break out for the next 15 minutes. However, it could come back down. Bearish, next 15-minute candles. We're barcoding. Bullish, bearish. Bullish, coming back down. Maybe next candle could come down with this momentum of this wick and start opening up back up bearish. Okay, but we'll go back to the fives. Sorry guys, but I tell you guys, please, you know, manage your trades accordingly. Don't just mimic what I do. I'm trying to educate and live trade with you guys. Okay, but I need you guys to also learn from my mistakes. That's how we learn. I wish someone was teaching me live from their mistakes when I was learning. Okay, so this candle is closing in 20 seconds now. You can see it's a shooting star candle coming back down. Will it come back down in this zone where we could maybe look to continue to buy in here? The volume is back in this consolidated zone. Okay, so we had that nice news breakout. Okay, but failed to continue to get up to that opening price. So those opening sellers are still holding the bar down. Yeah, Miss Lizzykins, see money, take money. Exactly. I saw the money and I never took the money. So it was an unrealized. I saw the money, unrealized profit. I got excited and didn't realize it. Why is it so hard for us to realize money as traders? Man, when I think back at it, the market just gave me money and I didn't even take it. Stupidity. That's my stupidity. Why? Because greed. Greed got the best of me. I wanted more than 50 pips. I wanted 60. I wanted to hit that yellow line and get 70. And I didn't take out 50 pips. Okay? So it happens. Hopefully we can learn from it. Okay? Sherry, I agree with you. Human nature is greedy, which is unfortunate. I tried to the best of my ability to not be greedy, but in a situation like that, you saw, for an extra 10 points, 20 points, I got greedy. Yeah, because I wanted more. Exactly, guys. You know, but that's trading. That's the psychology. That's the mindset. You're going to go through this as well. When you take profitable trades, you're going to go up 50 pips, and you're inside. Your mind is going to tell you, oh, just another 20 more, just another 30 more, another 50 more. It's going to be 100. Then I promise I'm going to take it when it gets to 100. And then when it gets to 100 pips, you're going to say, oh, I want 20 more. Oh, it's going to go to 20 more. You know, like you gotta have a disciplined approach. You see right there how I gave away 50 pips of profit. Okay, I didn't lose anything. I'm thankful to that. I didn't lose, but when I put it in my journal, it's a break even, and then I write my emotions in that trade. Exactly how I felt about that trade. Like this is me doing my own journal live with you guys. I write in there. My greed got the best of me. I should have been humble. I should have been humble and take those 50 pips and look for another trade. Okay, but it happens. Another thing was, what I look back was my break even. Was it too quick to break even? I don't really, you know, when I'm up 50 pips on any trade, I'm a scalper. So my main thing is protecting my capital. So anytime I go up 30, 40, 50 pips and I go to break even, I kind of don't look back at that and say, oh, I should have left it open. No, because I've left it open before and then it came back down where it would have been a break even, and then it came and hit my stop loss. Then it's a big demoralizing swing where you're up 50 pips and then now it came back to break even. It's not a break even, and now it comes and hits your stop loss. That's a 100 pip swing where you're unrealized 50 pip gain and now you're actually lost 50 pips. So that affects the way you trade. So I don't think it was me moving to a break even too fast. It was the problem with that trade was I didn't take any money out. That's the nature of the beast of trading. Wanting more, wanting more, wanting more. Okay, so we're going to watch gold for another 5 more minutes. And then we're going to move over to US 30 and NASDAQ. We're going to do good top-down analysis, see how everything is moving, and then maybe take a break 5 minutes if anyone needs a break prior to Wall Street. And then remember, guys, we got some 2 high-impact red folders coming out at 9:45. US Flash Manufacturing PMI and US Flash Services PMI are coming out. Okay, so we're coming right back up. Okay, so I'm watching myself get tagged at break even and watching a candle come right back up. Does that mean that I should get mad? That I should start revenge trading? That I should start tripling up my lot sizing? No, it means I wait for this candle to close, see where it closes, and maybe I can catch another bus ride. Okay, so I see it came back down, hit my break even, still holding support, higher low, higher low, higher low. Hasn't traded back in this box, so it's still coming right back up. And it could continue to drive back up to that yellow line, possibly. But maybe the market needed to come back down and grab that liquidity. My liquidity, my break even was market liquidity. Jay, you moved your stop loss twice. You're still in. Good. Yeah, if you guys are still in, that's awesome. Okay, let's watch the close of this. We close right back. Okay, right there. So will it pull back down or will it start to drive back out? So, you know, someone will say, well, Ron, I'm waiting for a body candle to close above there. Also, what I'm looking at is structure too. So if it comes back down, gets a higher low, it could definitely continue to break, fill those 2 tweezer top highs, and then fill back up to that point of interest and start to get up to that yellow line. Or it could continue to come back down in here. Okay, see how it's a bearish candle, hasn't broke out yet. So I want to see, will it come into 50% of that bullish candle? Will it come a little lower or will it break down? Okay, let's see. 50% is right there where my cursor is. Will it come into 50%, get that higher low? We can watch it on the 1 minutes, like the 1 minutes, 50%. I know as of this candle what I'm looking at. It's right here. The 1 minutes are moving clean for gold. Sometimes it's hard to say that, but the 1 minutes are moving real clean on gold. I like this, okay? See, now we're playing games now. Now it's barcoding back in this zone. So it was bullish, came back down bearish, went back up bullish. It's a lower high, bearish, coming back down. Will the sellers engulf all the way down here, then get that next leg of redistribution down? If you want to draw like your trend line on these 5 minutes, there's a visual trend line right there that's still intact. Okay, there's the trend line. We were ascending, but there's kind of our neckline right now. So now if they kind of break below here, it could potentially break, retest this, and sell back down in here. This is where maybe the bigger buyers are waiting. They're not trading this zone. The bigger buyers are waiting patiently down here to get filled. Either like 50% right here at 3,330, or at the lowest point, which would be a big double bottom from right over here. So will the market come down in here or here and then start its big move up? Possibility. But also, if that daily candle is coming back down bearish, getting down to the lowest point of the day, remember, the daily candle holds more weight than just a 5 minute level. So they could break right down there, and then gold could be very bearish, breaking down, okay? I think it's going to go into that 9:45 U.S. red folder news that will directly affect the U.S. dollar and impact where gold is going to move today. Will it come back down or go back up? But watching the 5 minutes, you know, we could get into a couple of scalps prior to that news. Here's that bearish candle that just came down, okay, right down. That wick is a higher low from the previous wick, but we still have the bearish volume. So buyers are trying to push it back up, but you still got that big body volume. Okay, it's going to close in less than 2 minutes. Is it a 6-second delay on YouTube? Yeah, there's going to be a delay. Like, I have it on ultra low latency. But then it's got to do with your end. Some traders say it's 20-second delay, some say 10, some say 6. If you don't want the delay, join our Zoom. Zoom has no delay. Lady Stone, it's testing you. I know. Markets test us. Just stay cool. Stay cool. You know, don't get upset. Markets are here to test us, okay? They test the best of us. Lady Stone is just testing you. You know, trust your analysis. Watch how the volume's moving. Just when you're not over leveraged, then you don't have to panic, okay? You can continue to watch. That's a nice wick. Building, higher low, holding that 200 EMA. We're still, you know, in that consolidated shoulder zone, consolidating, tested a lot of traders here before it broke down, came right back in. We got that higher high break, and then it came back in. So we're still trading the zone, but still higher low. All it takes is a couple buyers to ask to trade back up here, and then this could easily flip back up bullish, okay? How can we join the Zoom? Join that free Telegram, and then the links are in there, or visit our website stocksandhypertrading.com, and then you can join the Zoom. We'd love to have you on the Zoom, because not only on the Zoom you get live sessions with myself with no delay, with Dave. You get to be part of the Discord community, all of the education, everything else. Be part of the SST community, and that's what we kind of want with you guys. But if you're okay with YouTube and that 6-second delay, then just give us a like on YouTube. That's all we ask in return on YouTube. Okay, so guys, I don't want to stay with gold, you know, because if we get in a barcoding, then it's just going to go 9, 9.10, 9.15, and then we're going to lose time to get ready for Wall Street. So I trust that you guys can continue with your analysis. You know, I'll flip back to this thing, but man, my mistake was not taking out any profit right there, okay? But I'm not going to let that affect me, because now we're going to start fresh with some new securities. I didn't win any money. I didn't lose any money. It's a break even. It's a scratch, we call in trading. It's a learning experience. So hopefully you guys can learn from my mistake there to grab some money out of the markets, okay? Especially when you're on the lower time frames and you're kind of scalping these candles, okay? But let's start off with US 30. Let's take a look at how it's moving. This is Dow Jones. This is on the 5 minutes. I'm going to start off on the daily. We're going to go over this, okay? So critical zones that we always talk about right here was a previous all-time high. Back when? December of 2024, before we started the new year. And then we came back in there, double top, back in February of this year. Stretching that zone again into the future. Look at us. We traded in there July, early July, back down. Traded in here end of July, back down. We traded in here already this week, and it's moving down with those spin top daily candles. Okay, so are we going to get a selling day today? Possibly. We can see our all-time high. Okay, it's right there. Let's place a big orange line like Donald Trump's face right up there. There's Donald Trump's face at the all-time high, his orange makeup. 45,285.87 all-time high, pushed down. We came back just this week, Tuesday, lower high. Traded back in the red zone. Look at all this look at all these spin top indecision. But today is a candle that's already filling weekly lows. Are we going to continue to drop through here? Okay, so that's why if you're a daily trader, this is an impulse break on a daily, but we're going to go down to the 4-hour, hourly, and into the 5 minutes. So we'll look for entries. But if you ask me, looks like it's a great day to continue selling with this. With this volume, okay? But is there other critical levels, okay? So first things first is all-time high, lower high, lower high, volume pushing down, filling yesterday's wick and filling Tuesday's wick, okay? The only thing holding up is last Thursday right here. So can we mark a critical last Thursday's low right there with a yellow line, okay? I'm placing a yellow line, but if you want, you can bring your red zone right down to that yellow line, okay? That's what you can do to kind of manipulate that zone, okay? Bring it right down there so you know exactly. If we break this red zone today, then you know we're taking out that, and then all we got is this big body to continue to drive into, okay? So let's start off with going through here how we were trading yesterday. Okay, so yesterday was opened, was bullish, came back down bearish, closed with a little bearish. Now let's see, where did we open? Where was the transition from the close? Right there. No gaps in the market, 44,940. Look at today's tiny wick right there. Okay, that's our highest point, only 10 points. So it was originally when it opened up, went bullish, but right away got slammed down. Okay, so I know it's going to be a lot of lines, but I just want you guys to notice how close we are from where we opened to today's high. There's the purple high right there. You know, it might be redundant even putting it in there, right? But I want to just show you, it was just quick. That's all the bullish momentum we got today was right at the open, and quickly sellers stepped in, came, and look at it. They're pushing down. They filled yesterday's and Tuesday's wick. So let's just highlight these lows. They were actually almost equal bottom lows, equal and equal. Okay, yellow line. We broke through it right now. So we created a new lower low on the daily. So we penetrated through there. Remember this, guys. Wicks do the damage. Bodies give the evidence. Okay, so where they close. Wicks do the damage. You know, they come down there. They do the damage. But where the body closes, it shows where the evidence is of where the body of volume is. So if this body right now, how we broke those tweezers, we did some damage, but if this volume continues to push through, then we're going to continue to do more damage down in here because we're going to create new lows. But buyers could now just come back in and push this thing back up. So if we do right now of the existing daily body volume, I know it's moving, but let's just figure out a point of control of the current volume in today's candle. Where's 50% of this current volume? And this is a guess because it's moving, okay, right there. I'm placing a yellow line right there, 44,845. If we do come back up here, so if the buyers bring it right back up, back up, back up, back up, maybe right there, that's where it's going to find some resistance, and the sellers will be repositioning themselves right there to continue to try and take it back down. That could be the if buyers flip up there, then we could start to reverse the candle back up. But a lot of selling pressure, and it's coming from a new all-time high. You could consider this as two tops. Okay, so this could be building the second top. One top right there, All this big neckline is all the way down there. I would maybe look at this neckline right there. That looks like a false breakdown. I explained this before. That was a Friday, Monday, weekend fake out. But over here, you can see we broke the high, all-time high, grabbed liquidity, and now the volume is still in the red zone, double top right there. We could be on our way to push down. If this daily candle comes down here, maybe closes below here, we could scalp that move down. But think about tomorrow when we're coming back up. We might be coming back up here for a retest, and then Friday, a sell-off. Guys, just follow that path this week. Maybe that's where we're going, okay? So let's continue with this. Very bearish on the daily. In the all-time high supply zone, multiple rejections above us. Buyers were coming in, and then they got pushed back down. Buyers were coming in yesterday, they got pushed back down. Today, they're really got the volume coming down, okay? Now let's go from daily to 4 hour. Look at the 4 hours, okay? So we had a strong move all the way to the all-time high, and then we slowly came back down. They brought it right back up, and it got rejected, lower high, pushed right back down. Again, the 4 hour strong volume came in, lower high again. They pushed it back down, but we couldn't break that yellow line. And then finally, we had this big 4 hour candle. This is representing Europe. Europe had a lot of news, okay? I know this doesn't affect the US Dow Jones, but just to reiterate that there was a lot of red folders coming out of Europe from 2 to 6 a.m. Big bearish. Look at where the 4 hour candle closed. Right near the low. Like if this was a 5-minute candle setup, you know, it came right back up, bullish, 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 right into there. There's 50% right there, okay? A little bit below it. Then the sellers were there, absorbed them. Look at it, a firecracker. Popped that 4 hour candle, and there's the drop. It took out those lows, so we can clearly see, did some damage, got down to the lowest point of the day, and now there's some steady buying bringing it back up with this 4 hour candle closing in 57 minutes, okay? So a good zone within a zone. Now I'm going to get rid of the big red zone. I want you guys to look at this zone, what I'm looking at right now. 4 hour zone. Right here. Right there. Right there, guys. You guys see what I'm looking at? If you don't see what I'm looking at, now's the time to smoke a joint. Right there. That wick and that wick. See that body of volume? Untapped in there. Okay? So right in there. That's the point of control of European volume on a 4 hour candle coming down. We came close to trading right in there, but sellers stepped in and pushed it back down. If we do come back, retrace back up there, maybe they'll push it back down. That could be your inverted block. If buyers show strength and they close it above there, that could turn inverted green and then fill back up to there, okay? But right now, that's a 4 hour point of control of sellers in the market are in there. Stretch it into the future. We might be trading or revisiting this tomorrow or still talking about that block tomorrow. Now, if we can get some 4 hour candle volume closing below these lows, we could push down further. But I'm going to go on the hourly candles now. Okay, so let's go on the 1H. Here's the 1H move. There now I can see when it broke down, it was 4 a.m. We came back up, pushed it back down. A lot of, here at 6 a.m., a lot of it came back up, back down, you know, inside bar, all of that indecision. It came back up 3 times. Hourly candles came in there, rejected back down. We got our lowest point of the day right now, 8 a.m. Now the hourly candle's trying to come back up, okay? Is there some hourly point of interest in all of this? Yes, right there. There's a body, a wick, right there. Draw a white line right there, right at those bodies, guys, okay? There's support, support, support. Yeah, that wick did the damage. That created the new lower low, but it came back up above there. Again, white line, holding support. See that bar that closed below? So then it came back up, rejected back. Volume below the white line. Came back up, rejected back down. Volume below the white line. So this is hourly resistance, exactly at 44,800 below our 4 hour block. Okay. Do we have some resistance maybe on this hourly candle that just opened bearish ignited, hit the lowest point of the day? Now we're retracing back up to it. Let's figure out where 50% of this bearish hourly candle is with a white line. Okay, so we know if we're going to continue to push down or if they're going to close above. Right there is 50%. As a scalper, you know, I want to find my hourly block right there and stretch it into the future, because you'll see when I go into the 5 minutes, I'll show you the 5 minute candles, how we're trading in that red zone of that hourly candle. Okay, so we are pushing down, but we could continue to push down, but we could also sell some pullbacks today. Okay, let's go into the 5 minutes. Now you see how the 5 minute candles from the 4 hour, they kind of broke down lower low, came back up, there's double top, they dropped, new lower low, they came back up, lower high, back down, kind of lowest point of the day down there, came back up, rejection, all lower highs. Now you see it's a double bottom. Okay, it's a double bottom. Are we going to close with it and then maybe like scalp it right back up to that white line? But then when we get up to that white line, you got to know that there's sellers there. Here's a double bottom at the lowest point of the day. One bottom, there's the neckline, that false break up there, came back down. Not a double bottom, a higher low bottom. They're building it right here. Maybe during Wall Street, maybe we're going to close above here, maybe possibly retest this. Maybe we're going to have a bullish breakout, maybe a flip on today. Or it's going to be a false breakout. They come back up here and then they're going to slam it down. Okay, so that's why we got to watch what's going on. So just so you guys know, this is hourly resistance from the previous hourly candle. This is a 4-hour block of supply up there. Okay, and it's got a daily point of interest. Okay, right now we've got a bottom already established and now it's building. Like if you want to buy this, you might be looking to buy and maybe fill a little bit of imbalance up to that white line. Like from here to the white line, grab yourself 30, maybe break 40 pips, but understand that it could come right back down. Where do we have some 5-minute resistance? Right here. See, 50% of that candle dropped. Look at when it came back up. Right into it, then they dropped it right back down. Look at those wicks that broke out and back down, broke out. So that's 5-minute resistance above us. If it kind of impulsively breaks above the hourly, it's probably going to get shut down right there, and the point of control 4-hour block is still holding. Okay, so if I want to continue trading with the market, I'd like to sell with the market. Remember, lower lows, lower highs, lower low. Maybe it's just slowly creeping back up to trap some buyers prior to Wall Street, and then they're going to drop it down. So my bias right now is to continue to sell with the market. Either sell here, sell at this white line, sell here, more importantly, sell at the bigger, higher time frame block. Okay, so we understand that. I want to sell because the daily candle is very bearish. Maybe it's just pulling back up, and Wall Street will continue to drop it down. Okay, but bias will switch according to volume, where it closes and how it closes. Okay, just understand what you're looking for. Okay, so let's add our daily bar indicator right now to help us understand. Today is a very bearish day. You can see it opened. That's our highest point, that small wick right over here, right there. When we opened up right there, 6 p.m. That's it. That push right there. That was the highest point of the day. Then they came back down, found some support, double bottom, came back up to the highest point of the day. Again, this is prior to midnight. They dropped it back down, held support here, came back up, lower high. They actually closed it below. That's our 4-hour block. Dropped it, came back up, back down. You know, we're still moving down. Okay, so it is still technically, if we do a parallel channel of like what we see right now, starting at like here, you see guys, we are still trending down. It came up here, back down to the dotted line, support box, came back up, traded there, below, dotted line, dropping. Now this block is above us as resistance. Here's also point of control of that 5-minute candle, continue to push down. Here we kind of broke the parallel channel, broke, but the volume still stayed in it. We've retested it, come back down to the dotted line, come back up. We're still holding. Will it possibly break right here? Yeah, this could be a nice little scalp buy to go to the upside. It's closing in 30 seconds. If you're looking for a kind of quick 20, 30, 40 pip scalp prior to Wall Street, there's a nice pronounced double bottom. Here's the volume going to close. Watch. I might walk into a trade right here for a quick little scalp buy. What time is it? 9:10. Okay, here's the body of volume closing above. Let's see if it will actually close above. Just watching. There's the close. Ignited. Short wick. There's a drop a little bit. Let's see if it continues just to build a little bit. Okay. If it can grab a higher low wick. Okay. See how it closed outside of that trend line right there. Other ones were just impulse. It actually closed above. Now it could be retesting. 50% of the body is that white line. Will it flip right now? It could possibly flip and then short wick and then just fill back up to here a little bit. Otherwise, it might be a bearish engulfing candle coming all the way right back down and close inside the zone, and then maybe we could sell it back down. Okay, so you can see how it's a bearish engulfing candle coming down, but we got to watch. There, it grabbed another nice wick. Okay, so this thing could pop up bullish, back down bearish. Okay, you can see how it's kind of trading right inside this red zone right here. So what I'm watching to see, will it catch a higher low and come back up and flip and then go back up bullish? Or is this going to be a bearish engulfing bar, close below here, then next bar is going to sell off and we're back in this parallel channel, in the bearish channel going down? So is this just going to be a minor breakout, or is it going to be continuing to come back in here? So it's still holding. Oh my God, I got to do NASDAQ too, but like could look for a scalp right here myself. I'll do NASDAQ. All I need is 5 to 10 minutes to do NASDAQ, no problems. Okay, just want to watch maybe where this candle will close. So to show you, maybe it's going to be a fake out and then come back in, and we're back in the bearish channel, and then we'll get that next leg coming back down. Then we can see it's still holding resistance, still holding strong selling momentum. Guys, if you guys can hit the like button, subscribe to the channel, hit the notifications. We're going to go into Wall Street in about 20 minutes, and we have 2 high impact red folders at 9:45. US flash manufacturing, get ready. Nice pullback right there. Good push back up, but we haven't flipped this candle yet, okay? Now we have 3 more minutes to go on it. I'm still watching this volume, how it's just trading inside here between the buyers and sellers here. And then sometimes when it gets close to the countdown, like down to less than 1 minute, then maybe I'll hold off taking a trade. I wanted to get in early when the bar opened up, but now it's trading less than 2 more minutes and it's still kind of consolidating in here. So maybe I'll wait for this now to officially close. When that happens, what I do is now I'll go to NASDAQ, okay? Yeah, I might miss out on a trade, but you know, I kind of waited, but right now, maybe now might allow me to get back in. But kind of pushing down to 2 minutes, I kind of don't want to take that risk. I wanted to get in early to build with that candle, because now it's coming right down to the end, and then a new bar could open and then come right back down, and it could be kind of like a fake out candle. But let's just watch where it closes. I'm gonna hold off on trading it. I wanted to. I thought we were walking right into a nice little scalp early. But let's just watch where this one closes, and then we'll do NASDAQ together. Gold, what is gold doing? Gold is, it's doing nothing, okay? Gold, you can increase this consolidated zone right up here if you like. Just lift it right up there, okay? So you're still in this zone. It's still in that zone. You know, it's still building higher, low, higher, low, higher, low. Could continue to build out here, or they could elevator it coming down with that bearish head still holding that volume, okay? I'm sure that the US news at 9:45 is going to dictate the direction of gold in 30 more minutes. Okay, so here's a close on US 30, 50 seconds to go. Okay, so is it going to get some blue volume? If it just does, for education. If it does close above here, this red zone, let's flip it momentarily green, see if it will hold support, and maybe if it can come up a little bit, maybe to that hourly resistance prior to Wall Street. But again, if it's going into Wall Street, you could be in a buy, 20, 30, 40 pips, and then they could slam it right back down. But that's a good double bottom building with higher lows. I love scalping these moves. But look, sellers are entering right back in with 15 seconds to go. Are they going to come right back down? And the next bar might open with that bearish momentum and come back down. So look at how, you know, technical a close could be. Okay, so it closed bearish still in here. Now you got an ignited bearish bar coming right back down. Okay, I could I'm going to come revisit this back when we hit Wall Street. So right now, let's move over to NASDAQ. I tried to stay with that, but you know, I don't want to force any trades. We're just above that 9 EMA, and the 200 EMA is right there at our 4-hour point of control at our yellow daily line. There's the 200 EMA. So I use this to complement what I've already charted, and I use this as bias. So a great sell today would be right in there. Okay, if it pops out during Wall Street, comes up there, great sell opportunity could be right there. Okay, and our 200 EMA is lined up with our daily point of interest, and that's our 4-hour point of control coming from Europe. Okay, I'm going to do NASDAQ now. I know US 30 might make a move, but I'm sure that there's going to be a move at Wall Street and 9:45 and 10 a.m. Okay, let's do NASDAQ. Okay, so NASDAQ, tech has been selling off as of late. Okay, tech took a little bit of a hit, but could possibly, come right back up with a nice little dip buy today, or tech might take another hit depending on what we get in the news. Okay, right over here, double top, all-time highs. It closed above. Let's make this zone green. Have we traded back into this zone? No, not yet. Okay. Do we have any other points of interest on NASDAQ? Yes. Look at this when it came down. Looking for your pivot points. Just first pick your easy pivot points before anything else. Okay. There's a nice pivot. It came down. It stopped right there. That's what we call a pivot. And then it made a new high. Where? To the all-time high. So up there, that's NASDAQ's all-time high. Orange Donald Trump face right up there. August 13th. We hit the all-time high. And since then, we've been selling off from that all-time high. Okay. Do we have another point of interest? A pivot right here. Let's place a yellow line here. This is when we were coming right back up bullish. It stopped right there and had that bearish push down. We closed above it. There's that inside pullback holding. And then the third day is that bullish move that took us to the all-time high. Since then, look at right there. We have a bearish candle Tuesday this week closing below there. So that's representing 50%. We're still, look at yesterday's big drop yesterday. Okay, so let's follow yesterday's volume. Big bearish day. We opened bearish, bearish, bearish. Right there. Guys, look at the points of interest. Remember what I told you guys? Yesterday, I said place a line right here. There's a body and a body. Look at yesterday's low. Came right exactly to that point of interest. If you were waiting there yesterday, which we were, we had a signal set up. And look at the psychological number. It's exactly 23,000 on the dot. Okay? It came down there. Remember we had the Wall Street push down. We were in sells. And then our signal, we kind of picked it back up later on with US 30 and NASDAQ over here, okay? Picked it back up, it came back up, but it still closed with some bearish volume. Can we identify where 50% of yesterday's bearish volume is? I don't even need to grab my Fibonacci tool. I can just look right there. There's 50%, okay? So we're still technically below it. Now, let's follow where we closed, how we opened today. Our daily close, daily open right there, point of interest. No gap up or gap downs. We were initially bullish today when we opened. We came up. There's our wick, our highest point. It is technically below 50% of yesterday's volume. We still haven't traded back into this zone. So if it comes all the way back up in here, a little bit above, a little bit below, like if you're looking for your point of control, could be over there. Look at the number, 23,550. Man, I love when markets move very psychological like this. Sometimes you don't even have to look at candlesticks. You just tell me a number and I'll tell you to buy or sell. Just by knowing, if you tell me the direction where it's at, you tell me some other points of interest, we don't even have to look at candlesticks anymore. Okay? You can trade just by numbers. Look, so if we come back down, like today, we got to continue to fill all of yesterday's wick, which sellers can do, but we got to get good selling pressure. Okay? So what happens if we just kind of fill a little bit and then it picks up a higher low and goes back up? So from the distance, from the opening price to yesterday's low, what is 50% of that wick? Okay, just like that, from the yellow to the yellow line, just so I know a point of interest. Right there. Have we came into it today? Not yet. Okay, so that yellow line right there is representing from yesterday's opening price all the way down there. If we come all the way down there, maybe it will hold support and go back up. We're not there yet. If we can get some, like hourly volume, maybe closing below this yellow line, maybe we'll continue to push down and fill the wick and drop, okay? So it's pushing down. Whether you like it or not, it is a downtrend coming from the all-time high. Lower lows, lower high, lower low, lower high, lower low, lower high, lower low, lower high, okay? But maybe it will get ready to start to curl back up, okay? Possibly. But we still got to flip this daily candle back up here in order to come back up here. This is still right near the lowest point of the day, so it could continue to break down lower. So that's our lowest point of the day right now. Now, like let's move to 4 hour, because I gotta go a little faster. It's 9:20. Okay, 4 hour candles are coming down, trending down. There's another lower low. We came back up. You can see it kind of stalled up there. We got 3 wicks here, here, and here. We got a bearish candle, 4-hour candle that closed with volume below. We already have a 6 a.m. retest that came up. We caused our low of the day, so the volume is still here. We could continue to push down with this and continue to break down lower, okay? However, it could find a second bottom today, okay? If you look at it like this, where it came down, there's support, there's the neckline, second bottom somewhere down in here. If we see it, turn back up, there's the 4-hour neckline breakout, maybe close above, maybe retest this like a 5-minute setup and fill up to there. But right now it's still coming down bearish. So we got to watch down in here for volume to close, not on the 4-hour candle. Well, this one is important too because it's closing in 38 minutes, but more the hourly candles. We can see the big drop. Okay, so we're rallying down. This is a downtrend, rallying, push down, counter pullback, staircases going back up, and then an elevator coming down. This was yesterday at Wall Street. Okay, it came all the way down and stalled at 10 a.m. Then we had our 11 a.m., noon, 1, 2, remember the FOMC minutes, 3 p.m. power hour. That was the push right back up. And we've been trading right up there. Okay, that was power hour high. It retested it, triple highs up there at the purple high. We got hourly volume now coming right back down. Okay, do we have 50% of this hourly candle? Absolutely. Where is it? Let's place a white line right there. That's me guessing that that's 50% of 8 a.m.'s hourly move. Okay, we had, remember, unemployment news and things like that in there. To verify exactly, was I right where I placed it? Nope. There, now I'm absolutely correct. Can I go with a bearish point of control of that hourly volume? If we continue to stay below this, maybe we can continue to sell with the market. So right now we've just tested it. Okay, so we came in, we tested it. We got 37 minutes to go on this hourly candle, but that's going to take into effect Wall Street. So if we're looking at this, a big drop, we came back up, it is pushing back down. Will they kind of break the lowest point of the day and start dropping it back down in here? Maybe a potential double bottom on the hourly. If you kind of want to already map it out, big bottom right there. Okay, because if we trade into there, you got to know we're coming into a daily double bottom on the hourly right down in there. Okay, I also have a yellow line for a daily point of interest. I can go like right 50% right in there. See how I can move things around and alter things? So that hourly candle, we are currently pushing back up, but it is lower low, lower high, lower low. This could be another one that just comes in here, maybe a false breakout on Wall Street, and then they continue dropping it down today. Go into the 5 minutes. Okay, these are our 5 minutes. They are pushing down. If I do, again, a parallel trend line with these 5 minutes, starting like from up here, keeping it consistent, like right there. I can see I kept it consistent. Right there it came up, back down, there, back down. A couple false impulse breakouts right there. Volume back in the trend line, continue pushing down. Here was where it broke below the trend line, and then came right back in, back down, coming right back in, so, but we got this red zone right here, that hourly dotted line. Maybe, yes, we could get a Wall Street breakout, but it could come back in here and then drop back slowly, okay? So let's follow these candles, 5 minutes by 5 minutes. Will it close above here? Will I flip this box green, maybe build support off of it, maybe get a buy, or continue trading with selling with the market? Okay, we'll watch that. Let's put our daily bar indicator beside us. Opening price came back to the high, got rejected, back to the opening price, came all the way down. We just established the lowest point right now at 9 a.m. right when we opened this hourly candle, and now it's coming right back up to this point. We're 5 minutes away from Wall Street. EMA 9, we are right at it, and EMA 200 is all the way up here. Okay, so we're going to leave NASDAQ side by side with not with Wall Street, with Dow Jones. Okay, so there's NASDAQ. You see, guys, it's just kind of, playing games inside here. Came back up, impulse, they pinned it back down, could sell back down. But I don't like to take a trade a couple minutes right before Wall Street, unless I'm scalping 1 minute candles in and out. I don't want to do that. So we're going to wait for Wall Street market open. Just looking at gold again. Gold did close above here, so gold could continue to drive back up, but we're not going to be watching gold for Wall Street. Okay, if you're going to watch gold, you guys continue with it. We're going to keep our eyes on indices now. US 30 on the left, NASDAQ on the right. Hit the likes, guys. We're 4 minutes away from Wall Street. Hit the likes, subscribe to the channel. There we go. We got 700. Can we get 725? 725. We're going to go 25 pip increments. We're kind of scalp the likes. Can we get it up to 725 on today's call? And we're getting there. We're getting there, guys. And news. Okay, for you guys that are just joining us, 9:45. Okay, remember, if you're watching your 15-minute candles, 9:30 to 9:45, then 9:45, two big red high-impact U.S. folders. Flash manufacturing PMI. Okay, we're going to look at, is the manufacturing industry growing or decreasing, expanding or contracting? And then flash services, our services industry. Is it expanding or contracting? What do you think? Okay, so that's what do we think? Are these tariffs affecting the manufacturing industry? Is everything that's going on with like inflation affecting the cost of prices of things that our services are providing us? Are we consuming is it expanding? What do you think? Is the services industry expanding in the United States, or is it contracting right now? Okay, so this will have a direct impact on the US dollar currency. So it will impact the stock markets, what we're looking at over here, and it will also impact gold if you're trading gold, because it's correlated against the US dollar. Okay, so let's have some fun. Learn from my mistake on the first trade of gold. I went up 50 pips in profit, didn't scale out anything, then it came back down and hit my break even. If one of you guys on the call said, Ron, I scaled out a little bit on that trade, then it makes my day. You know, I live through you guys. So if someone tells me, Ron, all good, I got some money out of that, I scaled out, I'm happy. You know, that helps me. That helps me. Perfect. You scaled out, iPad, Lady Stone, perfect. Okay, see, I'm happy. So my break even, don't worry about me, guys. I'm good. I just want you guys to learn from me. Okay, so let's pay attention. NASDAQ is pushing back up. Watch for also, like, you're going to see explosions. When markets open, there's going to be explosive moves, right? So make rules. Are you going to trade right away the first candle, right away the first 10-second move? Are you going to wait 1 minute? Even if you're watching a 1 minute candle, you got to wait 60 seconds for that 1 minute candle to close. Or if we're waiting for 5 minutes, we got to wait 5 minutes. 15-minute traders are waiting for 15 minutes. But then we walk into that news. Let me just look in the pre-market real quick. Any notable names? Everything is like just flat. Down 0.5%, down 0.25%, up 0.25%. Nothing, no real standout names. Remember we had Walmart earnings this morning? They released at 7 a.m. Walmart. They're up, no, they're down almost 3% right now. And guys, don't forget we have Jackson Hole all day today, day one, with Powell, okay? It's a 3-day event held today, tomorrow, and Saturday. Walmart misses on profit, raises full year guidance. Okay, so Walmart is in the red right now, pre-market. That has nothing to do with NASDAQ, but overall, a snapshot of the U.S. economy. Okay, here we go, guys. 30 seconds to go. NASDAQ is pushing up bullish. Maybe tech might recover a little bit of the sell-off. However, it could just come up here, go lower high, and drop right back down. US 30 is breaking down right now. Okay, will it take out the lowest point of the day? Good luck to everyone. Please trade proper risk management. Okay, here we go. Okay, so it opened bearish, came down right near the low. Will it come further down near the lowest point of the day? NASDAQ closed right up there. It's a bullish ignited candle starting right there, came back up, pushing back down. A little bit of indecision on US 30, okay, and then pushing back down. This is the first 20 seconds, okay? So black is a bearish candle. Yes, black is bearish. Black is going down. Blue is bullish going up. Okay, so we just took out momentarily the lowest point on US 30. Okay, will it take out the low? Will it flip back up? Or are we going to continue to push down? The daily candles right near the lowest point you know. So this is sometimes where you take that sell with this volume, but if you do, you're taking it on impulse, okay? That's an impulse move. Some traders have rules and then they don't take impulse candles. So have a rule. If you took that quick sell on market open, great, you got some money. But now let's figure out. Now it came down to that daily yellow line right there. Caught a wick, coming back up. Where will this body close? NASDAQ also took out the lowest daily point, the purple line, has a new lower low on the day. What type of reaction will it get? Will it catch some buyers coming right back up, or will it continue to come down and close below or relatively near that point? Okay, I'm still not in a trade. I'm still here, just watching. Still a lot of time, 3.5 more minutes to go. How's everyone doing? Everyone okay right now? The market is just moving in the intended direction. Remember what I said? I'm bearish. I'm bearish. Okay? I didn't say I'm bullish. I said I'm bearish. My bias is bearish right now, but we got to wait. Well, I have to wait for the first 5 minutes of market open to close. Deep breathing exercises. Yep. Breathe in, breathe out. Everyone, breathe. Someone's going to say, well, Ron, we missed out on a sell. Yes, I understand that. No problems. I get it. But sometimes it goes down and then you don't take out money and it comes right back up. Okay? You know, have rules. If you got in, great. Yeah, I didn't. I told you guys, I'm waiting for the first 5-minute candle close. Also, if you got in that sell, did you do anything down there? That's another thing that I always ask, because now it's coming right back up. This candle could flip and turn bullish and break out of here. Same with NASDAQ. We took out the lows, okay? So they scooped liquidity down there. That's a fact. Yeah, liquidity sweeps. You're correct. That's what a liquidity sweep is. They came down there. They took out the low liquidity, the daily low. They swept it right now. Will it come back down and close now with serious sellers bringing it down? Or is this candle bar going to flip and maybe turn bullish? Now we have 90 seconds to go into the close. Now we see a little bit clearer picture of what's going on. Okay, so yes, there was a nice sell there, but nothing happened unless you took out money. Because if not, now you're in drawdown. So us waiting for the 5-minute candle to close, me personally, I have no skin in the game right now. Okay, I'm watching. Look at now how NASDAQ turned into a bullish hammer. Will it close with volume above this red zone? Will we catch a pullback buy off of this? Will there flip, or is it going to be a fake out and come right back down? US 30 has not flipped as of yet. Football is life. I remember you from a long time ago on YouTube. If that's the same person, I remember I commented on your name, because football is life. I'm a Dallas Cowboys fan. Unfortunately, I've been a loser since the early 90s. Okay, so 30 seconds to go on the close. And guys, just a heads up, in 10 more minutes, we have the big high impact news. So, you know, some traders will say, Ron, I don't want to trade right now. I want to wait it out for that news. I respect that too. You know, I get that. Yes, we might miss out on like a 5-minute scalp going into the news. But if you got rules and you want to hold off for that news, hold off, guys. Don't worry. This is a lot of volatility right now. Okay, but let's watch the close of the candle. Look at the sellers now bringing it right back down. Okay, so maybe it will continue to sell if it's a quick, you know. Okay, I might, if this candle flips, I might look to continue to sell to fill that wick and drop down. Okay, it's blue right now. Will it come into 50%? Where's 50% of that bar of that candle? Right there. Okay, I'm going to go into sell. It flipped. I'm going to place my stop loss above that red block. See if it can come back down to that daily yellow line. Maybe break the physical lowest point today and drop prior to the news. Okay, so I'm testing out a sell. In a sell. Okay, it's in profit coming down. Remember, these are big body candles. That's 20 pips right there. So the yellow line is 25. Okay, just a quick scalp if you're looking for a quick scalp. Okay, would be down to 25. Okay, so I'm in that quick sell, you know, that bearish candle. I saw where 50% was. It opened blue, then I got in the sell when it came down. If it can break this yellow line and go up about 30 pips, I'm going to a break even. I'm telling you guys ahead of time. I've already got my hand on the trigger if we can continue to break down there. Okay, it's coming down. It's coming down there. Let's see if we can break that low down there. Coming down, it's coming down. See if we can break it, break our own low, break that yellow line. But if it needs to come back in, you know, we're still trading in that bearish trend line. Got my stop loss above there. NASDAQ is going other direction, bullish. If it closes above there, you know, you might have to flip that red box red to green. There goes US 30, okay? So remember, if it can break that yellow line, would be about approximately 30 pips. That's where I will start to go to a break even. And it's going to be a quick scalp, guys. I'm telling you, like right prior to the news. Okay, there it goes. Okay, there's the break. I'm going to a break even up 30 pips right now. Break even. I'm going to take out 80% down there too. I'm taking out 80%. Okay, because it's prior to news. 80% is out. Now I got just 20% at break even. Okay, that's a quick scalp because we're going into high impact news. Yes, I know it could break down further, but I don't want to take that chance. Just get in, get my 30 pips, 80%. I got 20% at break even. If the 20% continues to run down, perfect. If not, it stops me out right there. No hard feelings if I get stopped out because it's just 20% at break even. Okay, so that's a quick scalp to the downside. I told you guys verbally, so I know there's a 6-second delay, but I told you if it breaks that yellow line, it's 30 pips. I'm going to a break even and closing out 80%. I verbally tell you guys these things ahead of time. Okay, I know that there's a delay, but it's live trading Wall Street. It's not easy. It's very, very fast. The 1 minutes are even crazier. Okay. The reason why I did that, quick recap, closed back down right there. I figured out where 50% was. As soon as it came up, there was to just fill back down to that yellow line. That's it. A daily point of interest, which it did fill down there. Okay, and then go through the motions. If NASDAQ flips and closes above here, we're going to flip that red zone green. Maybe we'll retest this and continue go up bullish. And maybe US 30, it's got a higher low. We'll flip and turn back up green. But that's why I just have a break even. I'll let you guys know as soon as they take me out at break even. We have 60 more seconds. Guys, this is fast and furious scalping. It's not for everybody. This is my cup of tea. This is how I like to trade. Okay, so they took me out at break even. The 20%. I'm okay. But at least I took out my 80% at 30 pips. Now I got to watch and see where the bar closes. And then we're going into high impact news. So I did what I wanted to do in that trade. I just want to get in, grab 25, 30 pips, get out. Because I don't want to be holding with high impact news because you're going to see some crazy volatility. Okay, I can see how the US dollar is coiling up to explode right now. So it will affect this market as well. Okay, so guys, it's fast. I'm sorry, guys, it's fast. I'm trying to educate and live trade with proper risk management and teaching you guys in a fast-paced moving market. Okay, so just please, guys, if you're learning, just listen to also what I'm saying. The way how I protected my risk there, took out some money because my prior trade with gold, I got greedy. Okay, so did NASDAQ close above this red box? Yes. Go red to green. Because now it's coming back down to retest. Are we going to find buyers or is this going to be a fake out and come back down bearish? Now the markets are really opening up prior to this news. Okay, we've got bullish, bearish, bullish, bearish. Dow is moving rather nicely to the downside. Why? Because Dow is affected by manufacturing and services industry. Guys, why is it called Dow Jones Industrials? This news will affect Dow more than NASDAQ. NASDAQ is tech. Tech has nothing to do with, services and manufacturing. Tech is its computers, AI, computer chips, shit like that. Dow Jones is the industrials, manufacturing, services, okay? That's why it's moving a little bit more cleaner. I'm sure that Dow Jones will have a bigger move regarding the news than NASDAQ, okay? You got to know what securities you're trading, right? Don't just trade the security that your best friend is trading or what your girlfriend is trading. Trade what's best for you and what you understand. I follow the U.S. entire sectors. I follow in the whole industry of the United States. I follow everything. I don't just follow tech. Okay, so yes, I got stopped out, my breaking, and it's continuing to run down. That's okay. That's fine by me. Now I got to continue to prepare for the next bus ride. The next bus ride is going to come in a few minutes. I'm not taking a trade until news is dropped. Just making it verbally clear to everybody. Captain Boom, all out, done for the day. Gold and this one. Excellent, excellent. Oh, you're taking a long weekend? My man. Finally, someone is taking a long weekend, a Friday, Saturday, Sunday. Boom, I love you, man. Good for you, bro. When we start to do those Sunday VIP sessions again with the lifetimers, man, I can't wait to have our conversation again. Good for you, man. That's the beauty of trading, guys. I hope everyone can feel that one time. Trade Monday to Thursday, hit your weekly goal, and take Friday, Saturday, Sunday off just to relax with the family and friends. Amazing. Good for you, man. See, it can be done. It can be done. These are snipers in our group doing this. Very proud of you, boss. You and your brother. Hey, Boom, it really helps, that we're doing this and it's impacting others. Well, honestly, we're not just doing this for likes and subscriptions on YouTube and stuff like that. I don't really care about that. It's just I promised my son that we would get to 100,000 from day one when we started this. So I don't let my kids down. I'll sit here 24 hours a day to get to 100,000 subscribers if I have to keep educating. But when we get there, I'm not going to stop, okay? It's not just a promise I made to my son. It's a promise I made to you guys and Dave. We made these promises to you guys. We're here committed to you guys. We want you guys to learn how to do this. We want you guys to have a long weekend as well. But you got to continue to learn with us. Yeah, I make some mistakes. You saw today I made a crucial mistake, not closing out my money. But learn from me, guys. Learn from me. I'll expedite the process for us to learn. Let's just watch now. We're walking into some serious news right now. Okay, Donald Trump has been playing around with the U.S. economy, all about manufacturing, all about services, tariffs, all of this stuff. This is when you're going to start to see the numbers coming out, and it's going to really impact the markets now. Okay, so we got to pay attention to these things. Whether you're trading a candle or not, this will affect the way how we move next week, how we move the week after. Droska, why are we not moving the same way? I told you this. That's why you guys got to pay attention. Dow Jones is industrials, manufacturing, and services. These are what this news is coming up. Tech, NASDAQ is tech, has nothing. These are not the same securities, guys. That's why they don't move in the same direction. This is basic stuff that you got to learn. I'm sorry, but you're at a beginner level. You got to learn this stuff because you can't figure this out when Wall Street market opens. Okay, so we're continuing to push down. This might close below and get ready. Okay, US dollar's moving right now, bullish, but we'll see if the news comes out. Okay, again, here's the news, guys. Big red folders in 20 seconds right over here. Manufacturing and services. Get ready, guys. Okay. You're going to see some crazy volatility now. Okay, bullish ignited open. Got a quick wick. Could continue. Big bullish candle on US dollar right now. Okay, so markets could continue to dump. Okay, let's just look at these numbers. Okay, manufacturing was good. Good for the dollar, okay? Good services numbers. Guys, these are above 50 is expanding. They beat the forecast. They beat manufacturing. Excellent number. Also, guys, great numbers. Good for the US dollar. US dollar is pumping. Gold selling, okay? US markets right now. Selling, okay? There's a lot of Now, money is coming out of the stock markets and buying US dollar right now. Money is coming out of gold right now and buying US dollar right now. This is how liquidity moves, okay? You know, everything, you know, when we say is correlated to the US dollar, now you're starting to see it. Great manufacturing services numbers coming out. That's positive for the US dollar. US dollar is seeing a lot of strength right now. So it could be selling from US 30, selling from NASDAQ, selling from gold, realizing profits, and investors are buying the US dollar right now, okay? So remember what I said, my original bias was bearish on US 30. It is continuing to move. Do I just want to now just jump in right now and sell this candle? No, maybe we got to figure out where this closes. Maybe I got to wait for a pullback at this yellow line. Maybe I got to figure out where 50% point of control of this is. That's that patience and discipline. Yes, do I want to jump in right now? I could, but again, you might be selling the lowest point and then there could be a pullback and then you're going to go and draw down and say the markets are rigged. What's going on here? When you can patiently wait, okay? A great opportunity would be to sell near this yellow line again if it comes back up there. Latest zone is too much for the first time. You're going too fast for me. I know, guys, but these are how the markets are moving. If I was on the 1 minutes, you guys probably wouldn't even understand what I'm saying. Someone says, Ron, are you speaking English? I'm speaking English, guys, but I'm speaking fast. It's not easy. Okay? But just listen, if you can kind of just listen to what I'm saying. I know it's tough, okay? Man, I wish I didn't get tagged out of my runner, okay? Runners could have been running. Yeah, it's like an auction, an online auction. Exactly, that's what it is. Okay, so it did push down, okay? Sometimes it's not always just going to drop, you know, where we want it to drop. It's going to, every time there's a drop, like look at that. NASDAQ came down, remember, to our yellow line, guys. That's why I placed these on our charts. That's a daily point of interest. See the buyers there? They were pending. They waited to buy that dip and they got filled, okay? Will this bar close below here? Now that the market has kind of absorbed that, the news has been released, now maybe we can continue trading, okay? There could be dip buys, buying good sound security tech stocks, and now it's ready to continue to move to the upside. Let's continue to watch this. Now the news is released, okay? There was initial sell-off in the markets. We see the data, what's released now. Great numbers, fantastic numbers. You know, you got your U.S. unemployment claims right over here if you want to read up about that. That came out earlier on. You know, so it was kind of negative when that came out, but the flash manufacturing, flash services news, very positive. So good stuff. That's great for the U.S. economy. You know, I'm your neighbor in the United States. I'm in Canada here. I want to see a prosperous America. I want to trade with America. I don't want to have tariffs between us. I want us to have trade. You can place tariffs, but reasonable tariffs. Across the board, it was always like globally 3% tariffs, not 30, not 130, and these crazy tariffs that Trump is introducing. I'm okay with 3% tariffs, 5% tariffs, even as much as 10% across the board. That's okay. But when we go 30, 50, 100, 150% tariffs, it's kind of getting a little bit out of control. Both countries, all countries around the world should prosper from each other. Everyone has something to offer. Everyone wants to buy something. That's, in my opinion, how the world should work in free trade, but that's not how it works. Someone says, Ron, you're too nice about free trade. Why don't I have free trade with my broker? Why do I pay commissions and spreads? If brokers were that nice, then why isn't there a broker just allow us to trade for free? You know, allow us to use their liquidity and trade with no commissions and no spreads. That would be a nice world, but they're in the business to make money, just like other corporations. They're in the business to make some money, right? I understand how tariffs work. Reasonable tariffs are okay. We've seen that. We've been 30, 40, 50 years around the world. No one's really talked about it because 3 to 5% is normal. But when we go 30%, 100%, 200%, it's getting out of control. On both sides, you know, someone said Canadian dairy farmers charge 300% on tariffs on milk. I understand, that's crazy too, out of control. China hit us with a tariff on canola oil, like 400%. That's out of control as well. Okay, anyways, forget about tariffs. Let's watch. See where we're trading? We took out the low of the day, the news. We're right back in this block here. Again, we're barcoding on NASDAQ. Bullish, bearish, bullish, bearish, bullish, bearish. We're not really, we've had the news. They grabbed some liquidity. They hit some pending orders. But is it going to start to move back up? So we're right back to this daily point of interest on US 30. Okay, so now when we've got more volume, I kind of clean up my charts, get rid of some, like that. I'm getting rid of that white line because I have the yellow line, which it holds more significance. So if we continue maybe to consolidate below here, maybe we might, make a bear flag below here, maybe continue dropping down, okay? So I'm just going to kind of trap this volume right now on US 30. We're moving into 10 a.m. in the next 10 minutes. Again, if NASDAQ kind of closes back below here, we'll flip this zone to red. Maybe we're going to continue selling off, okay? If we take a sell right now on this candle, there's 3 more minutes to go. It's an impulse candle. It could come down, catch a wick, go back up. If you want to take it, you're welcome to. But again, if you're waiting for the body to close, got to wait for it, okay, unfortunately. Same with US 30. It looks like it already retested. It's a shooting star candle. That would be an impulse sell if you take it. It could technically come right back up. Okay, but if you're feeling it, like we're in this bear flag and continue to push down, start off with a small feeler trade. How are we doing, guys? Everyone's still breathing. Everyone's still okay. We do have 10 a.m. news coming out, consumer confidence coming out of Europe. Not really going to affect us. U.S. existing home sales will be coming out. Okay. And don't forget, day 1 of our Jackson Hole Symposium. It's held in Wyoming with some of the biggest bankers, financial analysts, and economists around the world. Gold, if you got it, kind of push back down. Maybe we can buy up a dip in here, or we'll continue selling down. But let's just watch this, okay? Guys, I don't like trading like this. To me, this is real choppy. Like, look at NASDAQ. This is real choppy, okay? If this wasn't even Wall Street market open or there was no news, I would be avoid trading this. I don't like this kind of volume. It's tough. Same with US 30. That big drop came right back up. In my opinion, I would wait till maybe the market settled down till like 10:30, 11 a.m. With Dave, he's going to do a post-New York session. You guys might get better trading volume. This is still erratic in my opinion, okay? This is not the best to trade. You got to understand what is good trading volume and what is really difficult trading volume. We had really nice trading volume like prior, like when I was saying with gold, where we dropped down, that's beautiful, came back up, pulled back, buy, looking good. This is now getting really difficult, okay? So this is what could frustrate you trading this. It could frustrate sellers and it could frustrate buyers. Same with NASDAQ. Like, look at NASDAQ. It's very, very difficult to understand where it wants to move. So like this, there's nothing wrong with being on the sidelines. There's nothing wrong with saying, hey, I'm going to wait 30 more minutes or another hour for that next bust to come, for that next trade. This is difficult. Listen to what I'm saying, please, guys. Even coming from me, this is difficult to scalp. This is also difficult for higher time frame traders to figure out where this thing is moving. Okay, every time it comes down, it looks great to sell, but it goes back up. It goes back up. It comes right back down. Here was a huge move coming back down, and it came right back up. Right there. Why didn't it close right up to high? Why didn't this open bullish and go back up? Because they want to bring it right back down. It came right back down. There's sellers selling this, and then it's coming right back up. So it's trapping buyers and sellers. Okay, this is a trap. This is trap volume. It eventually will redistribute itself out of here. Like this green zone, you can get rid of it because it's like kind of irrelevant right now. Sorry guys, I'm talking so fast. I've had 2 cups of coffee. I peed my pants 6 times already on this call. I haven't moved from this chair, so I'm wired. I'm all wired up. Yeah, Ron wears Depends diapers when he goes live. Okay, let's keep that between us. Don't tell my wife and kids. Don't embarrass me, guys. Sherry, I'm joking. I'm joking. I'm joking. I'm joking, guys. But higher time frame, you know, our daily candle is still showing a lot of bearish volume. Okay, so now we could kind of get that push down, filling the wick. It's a big bearish candle. I might take a trade on. I'm gonna go to the 1 minutes. I want to watch this 1 minute bar close. There, it just closed. Okay, so I'm on the 1 minutes right now. Maybe looking for a short entry. If it kind of retests this yellow line again, coming back up maybe for a possible retest. Let's see. I could be looking to short on the 1 minutes. Okay, see how it came up naturally? Can we come back down with this? I'm looking for that physical retest of 50% right at that yellow line on this 1 minute bar that's going to close in 30 seconds. They're kind of holding it down with this tiny, tiny, tiny spin top. But here it comes back up. Let's see if they reject it. Okay, there's the rejection. Okay, there's the bearish volume coming in. Coming back up. There's the actual retest. Let's see. If it pushes down right there at that yellow line, which it just did, can they flip the candle back down to bearish? Still in there. It's closing in 5, 4, 3, 2, 1. Close with still some bull volume. They gapped it up, ignited. Now it could come back down. Let's see if it engulfs and comes back down. They gapped it up, ignited. Okay, I'm going to go on a sell on that ignited open. I'm just going to place my stop loss above the purple line, just on these 1 minutes. I'm going to scalp these 1 minutes and see if the 1 minute volume can come back down to trade back down into here. I'm going to sell on the 1 minutes. Kind of retested here. See if it can drop down there. That would be about a 40 pip move. But I'm going to go with a tight stop loss. Okay, so I'm watching on the 1 minutes, not the 5s. Just going to continue watching the 1 minutes. Point of interest, if it can hold below this. You know, maybe create a double top on these 1 minutes. Okay, right there. If it doesn't kind of get rejected there, then it could fill those wicks, and my stop loss is just above that purple line, okay? Oh, I got someone texting me right now. No, thank you. Okay, double top maybe on these 1 minutes. A little bit of a red zone right here. See if it can continue to hold up on these ones. Up, down, up. Can we get that downward move? Nope, it's a hammer candle still holding. And we're going into 10 a.m. in what, 2 minutes? Adult diapers are for astronauts and for scalpers. Okay, so it did close above that little zone right here. Yeah, so if the sellers don't come in quickly now and push this down, Ron's going to be in trouble here. Okay, so there's that bearish bar coming down. Okay, maybe they grab some liquidity up there and could really bring this thing down, close below here, and then have that drop going in 10 a.m. I'm trading with a tight 1 minute stop loss just right above that purple line. Man, that was a good push down, but buyers are protecting this move right now. I'll verbally let you guys know as soon as I get taken out. And NASCAR, I didn't know that. See, I learn everything every single day. I learn something new. Okay, this is 10 a.m., guys. I'm still in the sell-in drawdown. Okay, can we get a 1 minute bar with this news close below here and then get that flush coming down? Okay, so it's right back to where I entered. I'm back to break even. It's not why I took this trade for a break even. Took it to get into the money. Okay, So we've got to follow this volume close. It came down. You see how erratic it gets? This is the first 1 minute candle. It came right back down to entry, hold support, and now it's coming back up. Maybe going to tag some more pending orders up here, but my final stop loss is right up there. So I'm about to get tagged out. That's it. Taken out. Okay. So that scalp did not work out on my part. Should have waited for that 5 minute candle to close. Shoulda, woulda, coulda. Man, this. Okay. But guys, maybe the markets are gonna reverse today. A little bit bullish back up, but again, there's that. I have an alert. Place an alert in here. This is my 4-hour point of control. It's more important than any one of these lines right up here. This was the London volume that dropped the market, that came down. If it retraces all the way up there, that's, you know, the point of control of today's big daily bearish candle and your 200 EMA. That could be a possible area to entertain a sell. If the buyers bring it all the way back up there, okay? NASDAQ to me is very ugly right now. So I would stay away from trading this altogether. I'm going to walk away from this and come back later on this afternoon and see what's going on. But Dave will be stepping in a 30 more minutes with you guys. Yeah, 1 minute entries can be very dangerous, guys. Yep, you saw from my 1 minute entry, it was very dangerous there. But today is volatile, guys. Like the markets are moving, and we have that Jackson Hole Symposium. Okay, so things will be released. Remember, it's a closed meeting, but maybe some things will be released, and you'll see about it on the news. But guys, that's it for me. I do need to take a break. I got a headache right now. Watching all of this these type of price action really hurt the eyes. But maybe Dow Jones, you know, came down, make the low. Hey guys, if it flips, you know, holy, it could be coming all the way up to that 4-hour point of control right now. I wish I could stay longer with you guys and continue to trade. But we'll be back tomorrow morning, Friday, 7 a.m., guys. If you want to join the team, Stock Sniper Trading, we'll love to have you on the team. And there's also free blogs available, guys. We did one on learning more about dividends, passive income. What is the Jackson Hole Symposium? That's day 1. You can read a little bit about it and some more blogs in there. If you want to join the team, guys, love to have you. There's a free Telegram channel pinned at the top of the channel. Everything we do at SST is available here, okay? But guys, that's it for me. I had a great call. It was fun. We learned something. Hopefully you learned from my mistakes today. And but I respect you guys that hit your daily goals and you guys have dipped out of the markets and done for the days. Congratulations to you guys. And hopefully we can have some fun tomorrow. We appreciate you guys. Thanks for everyone for the love on YouTube. Subscribe to the channel, liking, and hitting the notification bell. And tomorrow, guys, I'll see you guys 7 a.m. Eastern. Enjoy the rest of your day today with Dave. And just be careful trading on a day like today. You can see already it is kind of volatile coming through New York. Maybe things will pick up. Maybe we got a nice big bullish day. Again, look at, you know, the daily time frame. Also, guys, we just came out 30 minutes out of news and Wall Street. That doesn't mean the day is over trading. Just go back to your daily analysis on your securities and take a look at the daily, like how everything is moving overall. Like if we can come back up with this big wick, you know, we're still trending up. If they can kind of get back up here and flip, this could start a bullish move coming right back up on US 30 and NASDAQ. Maybe it recovers from this weekly downtrend. It's finding some support, maybe ready to curl back up, okay? But that's it for me, guys. Have a good day today, and we'll see you guys tomorrow morning. Thank you, guys. Have a good one.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.